Hello everyone. Able to hear me okay? How is everyone doing? Cool. All right, so what do you want to talk about today? I see some regular folks, Alfred, Sharwin, Ankita, Carl, welcome, Ramesh ji. I see two Ramesh. Sam, Sean. Sean, is this your first time or did I miss your name in some previous meetings? Just wondering. First timer. All right, cool. So, um, we have a few minutes before we get started. Maybe you can introduce yourself, what kind of an investor you are, what are you looking, for how long have you been investing, what's your area of interest, and what are you looking to get out of, this next 2 to 3 hours?
I can start.
Yeah,
Yeah,
right.
I'm Carl, and I know you from Sherwin's
Oh,
group,
yes, you sound familiar. Okay, got it.
and and just from the discussions there, a lot of people are doing options. It's something that I know very little about, but I do see some benefit in there, and I need to get more grounded and know the possibilities. So really interested in knowing about how to use options. I would say I'm not a trader. I'm more of an investor
Mhm.
looking for longer term. But I'm also very risk sensitive, and I think that's where the option can help me, retain my stock position if I can hedge it properly.
Correct. Yeah.
Right. So that's kind of my goal.
Cool. Yeah, so generally in these meetings, I don't get into like details of options unless there are some questions. We because not everyone is interested in options, but during the breakout rooms, yeah, we get into as much detail as you want to. So if you have any specific questions, do ask. Or if you are very beginner, I still have a recordings of the boot camp that I did in 2024. That was my fifth one. After that, I didn't get time, which basically has a series of videos of. I basically explained my own journey, and I wanted to create a content which is useful for long-term investors, right? How do you even dip your feet into it all the way, or how to use options to hedge your portfolio? So if you're
Super.
interested, yeah, I can give you the link. It's available for
I did see them on the menu somewhere, I believe. Um, but so thank you. I think that'll fit fine with my objectives.
cool. That's cool. I just want to make, yeah. I want to make sure that these couple of hours are useful for you guys, and that's why I want to know. Okay, what else you guys are looking for? Anyone else want to go and introduce themselves? Those who are first timers here. By the way, Carl, where are you dialing in from?
I'm in the Toronto area.
Okay, all right. Anyone else want to introduce themselves? Cool. All right. Look, is anyone else here for the first time? Nope. Rest is a regular crowd. Cool. All right. So, what do I have today in my agenda? Let me share my screen, then we'll take it up from there. Okay. All right. So big agenda for me today is to go through 13F filings. Let me know if you do not understand what 13F is. How many of you are familiar with 13F? Or how many want to know, hey, what the heck is 13F? Why are we even talking about it? Only talk about it once a quarter. Uh, Okay, Bright says, don't know about it. All right. Yeah, so that will gonna be a big agenda. And obviously, as always, I'll go through quick rundown on the macro side, what happened. We want to talk about some company specific. I do have a content for company specific plus crypto. But given the fact, and I've seen over years that when we are discussing 13F filings, folks want to get into the details of it. Tell me what this investor did and all that stuff. Okay, I'm jumping the gun. Let me first explain what 13F filings mean. So 13F is a form that is filed by any money manager that are managing $100 million or above for other people, right? OPM, other people's money. If you're managing it and your asset under management is more than $100 million, by law, you have to file this 13F form with the SEC. Now that 13F will tell you, and it has to be filed. The deadline is 45 days after the end of quarter. So right now, if you look at it, we had April 15th was yesterday, which was 45 days after the end of Q1. So I started to, so that's a kind of a deadline. Like some money managers may get some exceptions. Some money managers start filing in their 13F documents whenever they are ready. I have seen 13F started to trickle in around, like, if quarter ended on 31st March, maybe around mid of April. But majority of 13F filings are filed by SEC on the deadline date, which is 15th of the next month after the end of quarter. So why do all the financial channels and the Twitter and any financial media that you open up will be very active and talk about the 13Fs? If you look at CNBC, they'll say, oh, this is what Warren Buffett bought and sold. All the information come from the 13F filings, right? So and as an investor, a lot of people want to know, you follow some investor, hey, what did they buy or sell? Where is the money moving into? Right? So if you go to, there are many websites, you can see the content. If you just Google it saying Warren Buffett buys and sells, it'll tell you what Warren Buffett bought or sold in that quarter. There are some things which will not, that do not report in 13F. I think on my website I have a list of what gets reported in 13F. But I think from our perspective, as a DIY investor, I think most of the stuff that we are concerned about is reported in 13F. There's some stuff which is not, but I think most of the retail investors will, we got enough coverage by looking at 13F. Okay. So that's why I think the Saturday after 13F filings is a little more interesting to see what is Wall Street doing, right? I'm most interested in to figure out what is Wall Street doing to the stocks that I own in my portfolio. All right, and clear about 13F? So that's going to be one agenda for, some big agenda for discussion. Okay, any other questions before we move on for our today's discussion? Can you share the link where I can see the recording? I missed that. I think I forgot to put for the last week. I only realized it yesterday. I was so busy in working that I don't think I put the recording of last week. I mean, it's always available at the same place. So if you don't see it there, it means I missed out updating the recording on that. So thank you for reminding me. And yes, I looks like I slacked last week in terms of pushing up the recording, but maybe I'll do this week. I'll do for both the last week as well as this week. But let me give you a link where the recording is available. There we go. Okay. Yeah, I see it's only 3:19, mid of April, and then week after that we didn't have a meeting, but last week's meeting is missing. Cool. All right. Anything else before we start? Macro level. What else you guys noticed this week? Any new learnings you want to share? Sam is sharing some screen on Manus. Okay, this is yeah. There have been something else going around Manus. Is Meta wanted to buy Manus, and then Chinese government came in through a spanner saying, you can't do this. So I don't know where it's going to end up. I also don't know. I don't even know if Chinese government mandate saying we block this acquisition gonna mean anything, because Manus team is anyway working from Meta office and they're all already working as a single team. So I don't know how they're gonna even unwind this collaboration. But go ahead, Sam. Uh,
Uh, Vivek, the reason I brought that up was because people like me who don't like to pay for you know, I get percentage gain. That's how I earn money because I don't know how to do options. But what I highlighted is Alibaba. You see, I should have bought Google a long time ago. I love Google, and it's like 20% into space or 8% into SpaceX. But you see that Manus uses Anthropic
mhm.
and Alibaba. So I'm starting to pay dividends for my other holdings.
Okay.
You see what
Yeah.
I'm getting at?
Yeah. I mean, I'm bullish about Google in terms of product as well as their investments, etc. But we'll see who else bought Google. So this is your time to maybe ask a lot of questions on individual stocks that you own and see, okay, can you look at it this angle? Who owned this? Who's buying it? Who's selling it? What's been a trend? I don't think I've found anywhere on internet where this information is available. So you guys know I've started working on it. I used to have it's in some crude form, present a consolidated data, um, and yeah, we'll review these things. Cool. All right, so let's dive a little bit. Start with the little macro level. First of all, everything that we discuss here, I have to give the disclaimer. I don't know why, but anything that we discuss is only for education, right? So don't go and trade. Oh, come on, this is what I heard in a Saturday meeting, and I'm gonna back the truck up on this particular investment. Don't do that. Okay. Uh, Overall, in terms of a key themes, I think there are still questions around. We are in May and their seasonality says, hey, sell in May, go away. I don't know why this adage is still there and is being talked about, because that hasn't turned around to, hasn't been, it's not that every May has been bad for investors, right? So if we look from a return from May to October, sure, it's less than the other months, but still you are positive. But now we did see this week, we did see some sell off in the market, and now the chatter is back again. Are we gonna, is sell in May and go away will turn out to be true again this year? I have no idea. And number two, I mean, I don't even trade or invest based on these things. This is exactly what we're trying to do, is trying to time the market, and no one has been able to, right? And I have no confidence that I will be able to. So don't even try that. We hear all these things, selling may go away. As goes January, so goes the year. I think in one of our meeting we did talk about a lot of these Wall Street idioms, and sometimes they feel more idiotic than useful, right? So don't sell it. Don't change your decision just based on some historical pattern. If history rhyme, but it doesn't repeat always, right? So we had some economic data that came out this week. We had CPI. CPI rose 0.6% and 3.8% over the past 1 year, which has been one of the sharpest since May 2023. And that's what causing concern in mind of investor, that there's no way we're going to get any Fed rate cuts. Remember, we talked about at the end of last year, we were expecting 2 rate cuts. Somewhere like 2 months ago, we were expecting 1 rate cut after we start getting this Middle East war. And now the inflation, looking where the inflation number is, now we are not even pricing in any rate cuts. Market is not pricing in any rate cuts for this year. What does this mean for us as an investor? Generally, if market is pricing, if we get a rate cut from Fed, it adds more liquidity to the market, and the market love that, especially if you're an investor in a small and medium segment companies. Like I do Bluem as an ETF, they are the mostly they are the feel the most pinch or the benefit from Fed rate cuts. The bigger companies, like the top constituents of S&P 500, doesn't matter really for them because they don't borrow much of money anyway. They are all cash flow generators. But some of the smaller companies have a borrowing cost which goes up if Fed increase their Fed rates. So anytime you hear the news in terms of may not be getting Fed rate cuts, or maybe will increase the Fed rate, Fed will increase the rates, or when the treasury yields go higher, the cost of borrowing becomes higher, and you will see that Russell 2000 or IWM will sell off, right? So I'm just pulling in an IWM chart to see what happened on Friday. It was down 2.4%, right? More than some of the other indices on the same day. Let's look at compare with SPY, which is bigger, right? And let's look at QQQ, which is mostly tech, right? And then the fourth one, the big one. I don't know why people pay a lot of attention to this, because I somehow don't like Dow Jones. How many of you love the Dow Jones index? I track regularly the Dow Jones index. The rest of the world does, but I don't understand why. Uh, why do you think you should track or you should not track Dow Jones index? Any thoughts on Dow Jones as a tracker?
60% of the
price-based.
market.
Sorry, go ahead.
60% of the market.
Is Dow Jones?
Yeah, about 60 diversified.
Oh, Dow Jones has got 30. DJI has
Oh no,
30.
60% of the market
Okay.
cap.
Oh, okay. Okay. I was unaware it's got a 60%. Someone else was saying something. There was who else want to share their
Yeah, it's
thoughts?
price weighted, so it doesn't make much sense.
Exactly, right. And number two, it has got only 30 companies. So for me, while like CNBC, Bloomberg, or even I think outside of US, when I talk to my friends and family, they mostly pay attention to Dow Jones. And I'm like, I tell to my brother, I'm like, why? And he says, oh no, that's all we hear on channels. Then I explain him in terms of the composition of Dow Jones and how it is price weighted and exactly, and it doesn't make any sense that your company will be included or excluded from, could be included or excluded from Dow Jones if they did a stock split or reverse split, right? That doesn't change business or doesn't change market valuation, but it does add or remove it from Dow Jones. So that's one biggest factor why I don't track Dow Jones or don't like it. Number two is it only looks at 30 companies, right? And I don't think 30 companies represent the state of economy. How much ever you may try to find out the different diversified companies, 30 companies is too short a list. So I personally don't pay attention to what Dow Jones is, but media will be, because the rest of the world pays attention to Dow Jones. The other thing is, this is the oldest index, right? The first one that came out in terms of from a tracking perspective, and then it has got a staying power, and the rest of the world talks about it. So media will still love to talk about Dow, right? Dow was almost hit 50,000. I don't know. Maybe do you guys know if it actually hit 50,000 during the intraday? But all I know is that it didn't. It closed a little below 50,000. But I was listening to a podcast while I was driving to pick my kid, and one of the hosts was talking about, and he was reminiscing about his dad in 1960s used to talk when Dow Jones had hit 1,000, and they used to talk about Dow gets to Tao. So the host was saying now instead of Dow getting to Tao, it is Dow getting to 50 Tao. Right? Imagine someone invested in Dow Jones in 1960s or 50s, whatever the time it was referring to. Now it is almost 50 times. Right? And people used to wonder at that time wow, Dow hit a Dow. That's like the best thing that has happened to the markets. And now we're talking about Dow 50, hitting 50 Dow. Right? Anyway, so that was one big news. Dow Jones about to hit $50,000. Market was already like S&P and Nasdaq crossed all-time highs. Though on a Friday the market sold off a little bit. I feel maybe a little bit of profit taking. Number two is because of the inflation numbers, right? The inflation stays higher. US the yield on your treasuries will go higher. That makes the bigger investors a little more attractive to keep your money in treasuries, right? If I can get maybe 5%, generally those who track macro probably know better than me. 5% is a rate wherein you'll start to see market really start to break up if the treasuries goes 5% and above. I don't know what your thoughts are. I don't focus too much on day to day or week to week or month to month movement on treasuries, but market do sell off when the yields on treasuries go high. Because why take a risk? Right? If I'm a pension fund or endowment fund and I need to make 6%, 7% to meet my obligations, and if treasuries give me 5%, why take a risk on equity just for another 1 or 2%? Right? So not that attractive for those big funds. So that's why you will see generally when the treasury yields start to rise, market will sell off a bit. And on Friday, the yield on 10-year treasury note climbed to the highest in over a year. Right? And that's the reason we saw a little sell off in the market, right? But come on, what's this? What with sell off? We are still like close to all-time highs. Right? So from positioning perspective, I'm not making any changes, guys. We're still stay on track, stay on track. Time in the market is more important than timing the market. And so don't even, at least I don't even want to try. But I know a lot of smart, especially people, more folks I've found from a tech industry. They are always of opinion that we are smarter than within the market, and we can actually time the market. Go ahead and do it, not for me. Jose saying US 10 is at a trend line resistance level. Would be surprised if it comes off in the next couple of weeks. Right? Dip buyers could always come back around. We have seen earlier also. Maybe the world has changed. Maybe the whole investment community has changed. We have seen these bouts of market selling off, and then the sell off lasts for a day or two, and the dip buyers come right back up in and buy up the market. So we'll say that's why it is like I'm not of opinion around. Oh, you see a weakness in the market, you sell off and go. You never know. I mean, at least I don't know what's going to happen in the market for next year, right? So I just stay invested. Oil was one big reason in terms of the inflation being high, and looking at oil futures, hopefully, we'll get a peace deal. If you have to believe our president, probably we've already ended the war, what, 50 times? And but still, reality is we were not there. We are not there yet. Market hopes that we will get a resolution to the whole this Middle Eastern situation, and that's why you see the oil future curves shows that we're gonna be the WTI will be around 80 by the year end, and that is why I cannot turn bearish at this point of a time. So, are there some pockets in the market where the valuations high? Sure. There are always sector which are or the companies which are overvalued. Every day you can find some companies. But collectively, I think I still see there could be a lot of tailwinds on the market, especially if we get a control on this Middle Eastern situation. Arvinder say I saw article that no big deal coming out USA China. It affected Chinese equities more, and then in terms of a US equities, I think Boeing got impacted. So you might see at some of the traditional industrial companies got impacted. So more impact on the Dow as such, because yeah, this US China president's meeting was like kind of a nothing burger, right? We did see a little bit of a bromance between the two presidents, but no really big deals came out of it, right? I think the Boeing got an order for maybe 200 Boeing planes, which was much smaller than what market was anticipating, and no firm commitments, right? We don't know whether China will buy Nvidia chips or not, and things could have changed from Friday. I have not looked at the market since then, but really market was very enthusiastic that we're gonna get some good deals, some good business deals, so which we did not, right? So but I don't think that was the one big reason for the market sell off. Yeah, some company specific, I think I do have some data around which companies probably got impacted, but I'm not a lot of Chinese stocks did, especially because they also ran up in anticipation, right? I own FXI, KWeb, Alibaba. If you look at an Alibaba side, after the earnings, Alibaba was down 2 or 3%, and because of this meeting, and then Alibaba was up like 8%. Alibaba was down because they missed their margin targets. They've been investing heavily into AI, but the revenue didn't grow as much as the hit they got on margin. So market sold off Alibaba after earnings. But then because of this deal, I'm like, what the heck? Why is Baba up? Anyway, so a lot of our Chinese stocks were up. But overall, I think, yeah, some impact, sure. But I don't think that, me personally, I didn't feel that it was more from the nothing burger meeting between US and China. So looking past the energy, it's the same stuff that we talk week over week. At the end of the day, what matters is the earnings growth, and we are still pricing in some decent earning growth, right? We're looking at what forecast for S&P 500 to 2026. We're looking at S&P to earn $335. Right? And if $335 right now, S&P is sitting at 7,500, that gives you what, 22, let me 22 PE. Right? So not that expensive. So this hike or this rise in S&P is kind of justified because we are seeing huge earnings growth, right, from in the market. So it's not. People say, "Are we in a bubble yet?" That's a question I hear a lot of time. You only get to know if you're in a bubble after the bubble has popped. But right now, I mean, the earnings are going strong, and what drives the markets is the earnings and the expectations of future earnings. Right? So I don't think that we are there yet. I can't talk about individual companies. Some individual companies are way over their skis, right? But overall market is still fine from earnings perspective. Right? And then we got a midterm elections coming up. This is another chart talking about an average of since 1982. So we are looking at almost 43 years of data, 44 years of data. S&P 500 return from January to the midterm election. And then what happened? So after the midterm elections, on an average, market has done better. Prior, so again, this is history. I don't know if it never repeats, but some data that we can look at to see, because this year is also midterm election year. Right? But this year is also one of a very unusual year in the history of US, right? So you have to also keep that in mind. What else on major indices? So this is like just 1 month. Look at QQQ. QQQ is up like almost 11.5% in a month. Talking from mid of April to mid of May, it's a huge run up in QQQ, 11%. And I think the worst one, if you call it as a worst because it performed the least good, is Dow Jones. Even that damn thing is up like 2%. So far so good. Nothing to complain on the markets. I see a couple of the Paul says, "What's your opinion about the stock Navitas? It is quadrupled in price over several months. Do you know what's fueling that stock?" I don't know in terms of what's fueling the stock because I don't own Navitas. But I mean, the ticker is NVTS, right?
I can talk about that if you like.
Go ahead.
So what comes next after you have lots of current flowing and things heating up in terms of the semiconductor demand? In the world of electrical engineering, what was the very first sector like 50, 60 years ago, which folks were working on before digital communications arrived? It was called power systems. So power semiconductors are essentially taking off big time only recently, and Navitas is part of that. So essentially, we have a huge amount of power which needs to be, swept through all these racks, and the need for those things which we used to deal with in the 70s and 80s, like power amplifiers and power semiconductors, it's become very strong.
Got it. Okay. Thank you for sharing that. So that's on. But do you own Navitas?
I just bought a little bit. Again, I'm trying to kind of see where the trends are.
Okay. No, I've not owned. Paul, any other question on Navitas? No? All right.
Does anybody else own any other names in that space? Not really. Okay.
That's a space I don't understand. So no, I don't have any.
Any electrical engineers in this group? Somebody with knowledge of double E. I guess that's
I
what
can maybe look at in terms of how it shows up. Navitas as a business. But let me take it maybe later on we can look at it. So yeah, so market has been doing just fine, man. Despite all the doom and gloom, at some point, like something that Trump says probably is correct, that hey, the market is like all-time highs. Right? What about AMG? It double in pricing. So I really don't focus on in terms of a pricing, what's happened on pricing, but I want to look at okay, what's the business of AMG is, right? So let's look at okay, let me go AMG. What is AMG involved? Affiliated Managers Group. And oops, so let me just sign up. Why it's not having my ID? Okay. Hold on, let me sign up in this. AMG. Okay, we look at AMG. Why the heck this still shows me ad when I'm signed up? Come on. Okay, I'll have to get rid of this then. AMG, what it does? It's an investment management company providing investment services to mutual fund. So area which I don't even look at it in terms of what they do. Compete with, let's look at their financials. Right. At the outset, I just don't like the business much. In terms of like the revenue has been declining or now stagnating. Right. Overall, from a Come on. No, not that I would want to be associated with it. Looking at, they have been diluting their shareholders like hell. Like there is no tomorrow, spending the shares like drunken sailors. So I don't really care where the pricing is, but not a management that I want to be associated with. Why the stock is going high? Maybe I don't know. Financials haven't been doing that great, so it could be the company specific, some news on what is pushing the stock higher. You'll have to look into that. Okay. At a quick, like what 30-second glance, few other things that I don't like about them is the dilution that they've been doing, and it's not when it comes to financial services, and I don't know if this is not exactly a bank, etc. Right? So it provides advisory or sub-advisory services. And financials are one sector which have lagged so far in the market. We expect financials to pick up the slack because of when the IPO markets, let's say SpaceX come out, and probably it will bring in a lot of other companies to the IPO markets. And number two, the the second part which administration had promised us is a deregulation, and if that goes through it, I do expect that the financial service to do good. But from this individual company, I have no idea why the stock is running up. I mean, is it? It's been a year to date. It's done nothing. I mean, so maybe in a month it has gone up a bit, but not a huge compounder, at least for a year. Let's look at a 5 year. It's okay for 5 years, 70%. Not that exciting though. All right. Once people stop thinking the bubble in 5 minutes, yeah. If everyone is so, in every crisis, we get hit by the stuff that we never anticipated. Otherwise, there will be no crisis, right? We will basically change our behavior to avoid all the mistakes of the past that we know about. So that's why every time the the pivotal moment or the catalyst comes from something that we have missed out. Could it be private credit? I think a lot of folks were talking about it could be a private credit this time, and that's why you see a lot of a sell-off on the private credit side, but we really don't know. I mean, it's only in a hindsight we will try to figure out, oh my gosh, we should have seen it coming. Right? We should have seen during the dot-com that companies have no business and they're like raising tens of millions of dollars on a napkin on just an idea. How could we miss that? But we will probably have a similar discussion on how could we even buy these companies at 100 times the sales. What were we thinking in 2025 when they talked about AI? How did we pay up 100 times, 150 times sales? But when emotions get better of people are willing to pay up 100 times sales for a company. Do what that even means, 100 times sales of a company. But yeah, there are stocks, and I think one of them went IPO this week at a valuation of more than 100 times sales. Some people do want it, and the stock was up like almost 100%. So later on we'll figure out what were we doing. But yeah, make hay while the sun shines. Rajesh said this semi-demand boom does not parallel .com at all. Sure, none of these crashes have exact parallels in the past. That's what I'm saying. It will always get the catalyst might come from somewhere else, and then it percolate down because and impact semiconductor industry in an indirect way. And I don't think we can find out sitting right now.
Right. The valuation can get compressed almost 50%, just
Yeah.
like Cisco System stock got compressed 50% back in year 2002.
Yeah. So demand will be there. I'm not doubting, and I think I was chatting with someone like, what do you think about semi? I'm like, I just can't wrap my head around on valuation of some other companies. The demand will be there. The products will be used. We will need all these things. But does that mean they deserve the price that we are willing to pay right now? For some companies, I scratch my head. I'm like, what the heck is market doing? But it's okay. We paid Cisco. We were ready. Market paid top dollars to Cisco, and for next 26 years, it took Cisco to meet and get back to the same valuation.
Right. So, I mean, I owned Cisco and had to sell at $13 back in April 2003. I remember that,
Yeah.
because you don't want to get lulled into kind of like all these things will be, forever with you. It's not like a marriage. So you have to be watchful of Nvidia going 1/10 of what it's today, for sure. It could.
It could, So if you look at Cisco, let's go back to. And
Finally,
I
it's
think
back to
Intel got back to
$80.
its all-time. Intel got back to its dot-com high very recently. Cisco got back to its 2000 high way back here at in March. Okay. Yeah, around March or what March of this year. 26 years of wait. Okay. And it could happen, and we'll never know. We'll only get to know after some meaningful corrections. Like, oh my God, that was a bubble, right? We all even we'll always have these 5% ups and downs. We'll get to know only later on in the hindsight. Now, does this look like too good to be true? Look at this trajectory. Right? Only in hindsight we'll get to know. If it's let's say we think, oh my gosh, Cisco looks too good to be true to have run up too high. Maybe it consolidates here and then later on, it again goes up. Then, oh my God, it wasn't in a bubble. But if it corrects from here, then everyone will talk about, oh my God, it was in a bubble. Right? So let's look at Intel. That's another crazy stock. I'm like, who is willing to pay $125 for Intel? You guys know I love the stock at $17 and I bought it, but beyond 55, it started making any sense for me. And what do I know? It was like up at 125. I have a covered call at 85 and 55. Hopefully, if it gets called away, it gets called away. I have no regrets. I just can't wrap my head around who is willing to pay this much for Intel. But there are players in the market. The price that we see is what the last player wanted to pay for that ticker. Right?
Yeah,
Maybe
so
that last player hit a lottery ticket.
Well, you get in a phase of demand boom, which is what we are in right now, where it's not the valuation which is driving, but rather the momentum. And so I've created a momentum screen, but I can share that later. But like that's what's driving these power semiconductor stocks at this instant.
So momentum has worked well over the last 10, 15 years, right? But the momentum cut both ways. So you really need to know when to ride that momentum. It's like a roller coaster, and when to get off before the momentum turns the direction. So, and yeah, but that's a situation. I think overall, I think I'm still bullish on the market, but there are pockets in the market where I just can't wrap my head around what's happening. Looking at a fear and greed index from CNN, we are still in a greed. Maybe I should switch the colors to put red in when it is on a green and in a greed and extreme greed. And when it's an extreme fear, maybe make that as a green. Right now, I think it's what a month ago, not a month, end of March, we were like in a fear mode wherein this index was like 12 or 13, something like that. So whenever this is more in a greed or extreme greed, I personally, take a deep breath and watch from the sidelines. and let others make money, especially in some of those crazy stocks. I don't have to give in to the FOMO. That's fear and FOMO are the two big I would say emotions that we have to overcome as an investor. What else? What any other thing you watch? Any other crazy stuff you guys watched in the markets before we
Cerebrus.
Cerebrus? Yeah, there is Cerebrus went IPO. Right. So I was talking to a person Thursday. Thursday was day before yesterday. Who actually works in Cerebrus, and folks know about Cerebrus or so Cerebrus went IPO on Friday. Cerebrus IPO, and the stock was up like close to 90%. So they raised almost $5.55 billion. The IPO was priced at 185, but it opened at 325 or something. And it looks like it closed at $311, giving a company valuation of roughly $60 billion. Right? And how much Cerebrus has revenue? Cerebrus revenue 2025 $510 million of revenue, and we're giving a valuation of $60 billion, right? More than 100 times sales. They build not chips, but like a chip system. They got a big chips. But I think that their USP is they have a processing as well as the memory, all kind of a co-located on one big chipset. Someone from
So basically,
semiconductor industry can explain it much better.
so in 1986, when I graduated with doing VLSI design, there was this whole concept of wafer scale integration, which means like taking a dinner plate size chip and making a system on it. And now these people are essentially imprinting their TPUs on that, so it's going to be more memory efficient, it's going to be more efficient in every sense than a TPU. So it's a very clever contribution in Silicon Valley as of the last 5-10 years
Yeah.
from a hardware point of view.
So I don't doubt in terms of from a technological perspective. I think all they're trying to do is because of all this inference, etc. You need to have quicker data
Even for
transfer. So
training.
it's become rather than NVIDIA is basically has a multiple GPUs and the memory on side, and they have to move the data from there's a lot of data movement happening when you talk about these chips, even moving the data on a nanometer distances make a difference when you're talking about trillions of parameters. So their USPs were alternative to it and better because we'll be much faster. We kind of a co-locating both of these things. Very crude level in terms of this how they want to differentiate. Great.
I wanted to ask on this actually, or somebody said they have some background on this. Isn't this like the nth company doing this? Like I think Tesla tried to do this with Dojo. There were a couple of
No.
companies who were trying to do this at the wafer scale. And basically,
I mean,
even
wafer scale,
supposedly foundries also don't support it, supposedly, right?
I don't know the foundry aspect, but wafer scale for this I guess what we call neural networks. I think this is another is TPUs, which Google has, but I don't know whether they are wafer scale integrated.
Okay.
But yeah, so I mean, I heard of Cerebras 3-4 years ago. I thought it was very clever, and they're going public because there's good demand for them compared to like other more inefficient solutions. And you're right, like if you just take the standard old NVIDIA GPU, then you have to connect it with CPUs. With CPUs, do the calling of or from the agents. So what's happening as of the last few months is everybody is now suddenly realizing that these agents are making 10 times the number of calls, 10 times. Okay. That's why there's an insatiable demand for all this semiconductors, and which is causing the stocks to go vertical. And people think it's going to come back. No way. basically 10 times. Imagine if suddenly AI agents are issuing 10 times the commands,
Yeah.
because
So
every time you ask it a question, it's doing what's called reasoning. It's 73 different decisions it has to take before it comes up with the answer compared to before.
so I agree with you in terms of the consumption and the need of the part is going to continue to go up. I can't say about the stock prices of some of them. That may come down even though their business continue to improve.
Why would you say that? If relative to what
No, it's
consumption
because the stocks are
used to
maybe
be,
already overpriced for that growth, right?
no,
That's all I'm
okay.
saying.
So let's take the value of a stock 3 months ago, the price of the stock. If it was valued at X and now people are realizing 10 times that revenue will be flowing into their pocket, why would you say it's undervalued? I don't get it.
No. So say 3 months ago, you priced the stock at X.
Yeah.
I don't know what the value of the stock was. Price is what
No,
you're willing to.
yeah, but it was assumed that the number of kind of AI inferencing calls emanating from the
So,
AI agent were a unit of one. And today, suddenly, let's assume the market participants in the marketplace have realized, oh, we miscalculated. The number of interactions will be 10 times. And even if the revenue will now go 5-fold more, why wouldn't the price of the stock go up?
because of the price 3 months ago was had already included also. Go back, look at the
Five-fold is
Cisco
too much.
business.
500%. That's what.
Cisco business in 26 years has probably grown 10 times.
No, it hasn't. See, that's where the
No. No, in at the start of 2020,
Uh-huh.
at the peak of the dot-com bubble, Cisco business and the Cisco business in 2026, very different businesses, right? The revenue has grown up multiple times, but the stock did not move anywhere for 20. It took 26 years to get back to it. That's all I'm trying to say. I'm like, the revenue might continue to go high, but I can't say the same thing about the stock price of some of these individual companies. And it's nothing new. I know you know this well. We
No,
have seen in
if no,
2021 the same shade on 2021, right?
no. Okay, so there's a so you understand that, a company is a balance sheet, income statement, and the cash flow statement, right? And so if 5 times the expected revenue is now going to go into a pocket of, say, AMD, it'll essentially filter into the thing called the balance sheet. And so it will basically manifest itself as all kinds of metrics on valuation being low.
Hazel, you are willing to pay 20 times, 30 times, 40 times, 50 times the sales of the company, right? For whatever reason. Your business become doubles, but then you're like, why should I pay like 50 times of it? I am not willing to pay more than 10 times of it.
Because
There are
capital
multiple
has no other
transactions.
place to seek home other than these high growth areas of the whole
Yeah.
capital
I'm not.
market.
Yeah. So once that start to happen, that's what I know. My God, this market is going crazy behind these at a overall sector level.
Mhm.
That would be very very scary for me. But this is not the first time. Won't be the last time when we
Yeah.
get super excited and
Mhm.
are willing to pay obnoxious valuation for a companies. And look at the Palantir, the most recent one, Palantir. What has Palantir done over the last few months? The business has been growing
Mhm.
consistently,
The
but the
focus
stock
has
was
shifted over
already
last 12
overpriced
months.
at $200+.
Right. I hold apparently in a loss position. What I've noticed is over the last 12 months, since I've been excited about AI, the focus of the capital market has changed on the pipeline of where focus will be. So Palantir type stuff is no longer the bottleneck. The
Even
bottleneck.
on, I agree. I am 100% with you in terms of the usage and the growth in terms of the demand for the products. I am not 100% with you in terms of that the pricing of the stock price will always follow it, because it's not the first time, it's not going to be the last time when market gets way over their heels on some of the stocks. I'm not saying like all the stocks, on some of the stocks wherein we just close our eyes, shut on our ears and willing to pay whatever the market demands from us. Sean says Palantir last year earnings were exceptional. Growth is massive. Yeah, I know the company, Sean. I've been following this company for now almost since they came DPO. I love the stock at $7. We talked about it in Jan 2023 and say I don't know why it is $7. I started building position. I couldn't justify its valuation beyond, I would say, 65 or 75, right? I still own some. I sold a lot of it, but I still own some because it's a house money. Every time will happen. I don't this discussion, we will come back. Let's come back 3 years later, and then we will realize what the heck I was willing to pay so much for XYZ company, right? So anyway, we'll get to know only in hindsight. Once the the wind is taken out of these stocks. But the question is, we cannot not participate for the fear of, oh my gosh, what if wind gets taken out from the stocks. So that's why if you're investing in individual stocks, understand the business, make sure you're not paying obnoxiously high price in terms of what the business is expected to earn versus what the pricing currently is. We have paid similar stuff for in 2021, like the darlings of 2021, their business has increased, but we paid so much high pricing for them that those who bought at the peak of 2021 in many of those stocks, they're still underwater, even though the business has compounded. That's all I'm trying to say is difference between, I agree, revenue will grow, usage will grow. Some cases where the business are fairly valued, stock price will also grow. But there will be some businesses wherein even with their revenue growth and everything else, the prices may still the same or worse, they may even fall off. That's something that we'll have to guard against. All right. Moving on to the next 13F, or you want to look at some market moving stories? Up to you. The 13F is a little bit of a timely stuff. It just came out, so I had that in my agenda. Look at 13F. Going one. Twice. Last count. All right, let's dive into 13F. Okay, maybe I can hold on. I think I have the page open, so we'll directly go there. Oops. Let me just give me a moment. Okay. All right, let's talk about 13F. By the way, thank you for those who joined the waitlist for Optimizer. I will start to reach out to some of you folks starting the next week, and by end of this month, we'll invite some of you to start using this. I just wanted to make sure I cross as many T's and dot as many I's before I open it for anyone else other than me. But yeah, so I've been working on this over the past, I guess, many months. But the knowledge or in terms of the functionality, that's like a years of my experience that I've gone into it in building this. So yesterday I was like trying to fix the whole 13F and make sure it is in more presentable mode. So this is where the 13Fs are. So, and I think I have a link if someone wants to, because I'm opening it up for private beta. And if some of you want to join and get on the wait list, let me give you the link. Okay. So 13F is just one portion. A lot more around, especially around managing your option trades and all that stuff. Somehow I'd been struggling in terms of no other brokerage firm did it. So I'm like, okay, I'll do it myself. So looking at 13F filings from all the investors. So I basically pulled in data for almost 100, close to 100 fund managers, right? And then on to look at, basically take a step back and not really focus. I mean, we will look at individual ones. Some, if you are tracking some individual fund managers, but I want to take a step back and look at a higher level in terms of these money managers, where they're moving money, how they're allocated to a particular sector, so on and so forth. 13F, the other new thing that I'm starting to do from this quarter is also look at the trend, right? 13F information at the end of a quarter will tell you what the fund manager holds, but doesn't tell you anything beyond that. It doesn't tell you whether they're building the conviction, whether they are, losing conviction, they're losing faith in the company. So I always wanted to go back and look at it, how the history has been, right? But information wasn't available anywhere. So, and I took some time to build it. So from this quarter onwards, we'll be able to also look at how the historically the trend of various fund managers, and it did show me something interesting stuff around it. Okay, so looking at 13F at a big level in terms of looking at Apple has still the most dollars committed, almost $60 billion. Still, funds own $60 billion worth of Apple, despite Berkshire Hathaway selling Apple, right? 50 funds, almost 50% of the funds that I track have ownership in Google. This is the most widely owned stock. And Thoma Bravo has gone degen on one company, which is SailPoint. I think Thoma Bravo, this is probably the only fund where they disclose their public under 13F. Thoma Bravo has a lot more investments. So from their overall corporate level, it's not a degen bet, but for this specific fund, the 95% of the fund is in one company. I think maybe they created a specific SPV just for this company. The biggest new buys in 2021, where as they're putting the money in, is MicroStrategy. I think this is maybe a convertible note, right? Oh, I see a message, cannot see the screen. Is that a case for everyone? I'm showing something. Let me know if you are able to see the screen or not.
I can see screen, yeah.
Oh, you can see screen. Cool. Okay. All right. Maybe dial in again, Sunita. I don't know. Or if you're working on a multiple monitors or multiple browsers, sometimes happen with me, is the screen is showing up somewhere else. Okay, so let's continue on this one. MicroStrategy is $16 billion. Somebody bought $16 billion. I guess this probably is a convertible offering from MicroStrategy bought by First Eagle, right? So I'll ignore that one. Something is in ticker that I never heard about it. None of you ever brought in last 5 years or 6 years of these meetings is Sunbelt. And I was like, what the heck? 13 funds have invested in Sunbelt. It's the second most invested new position opened in Sunbelt. Now, this is how also become a part of our idea generation. I'm like, what the heck is this? I never knew about it. And there are some of the fund managers that I respect. Dodge & Cox, Ruane, Baillie Gifford, Dorsey, Markel, Giverny, right? I can't say same over Soros, is more of a trader. These are the fund managers that I do respect. I'm like, wow. So I put it on my watch list in terms of I need to figure out a little bit more about this company, right? Then SPY, Delta, Microsoft, and all that stuff. Most buys, right? How many funds added or bought new? Microsoft. But this is only based on how many funds bought, number of funds bought, not the dollars bought. The dollars bought is already, we talked about it here. Only $2 billion worth of Microsoft shares were bought, but 26 funds, new shares were, money came into Microsoft. 26 funds actually either added or bought new. So I think 19 basically added because 7 of them bought new shares in Microsoft. Meta is number 2, right? Amazon is number 3, Broadcom number 4, Walt Disney. Wow, Disney. I need to look into Disney. Otherwise, these are the usual suspects I see quarter after quarter. Okay. How many funds sold? So interesting thing around Google is 22 or 25. Probably there'll be some commonality between Class A and Class C. Funds actually sold Google. So money rotating from within the Wall Street. 25 funds sold it. A lot of funds probably would have bought it. 16 funds actually bought it. Overall, 50 funds still own Google. Right? Again, the usual suspects on the top big ones. Any questions so far? I'm just trying to find out some interesting insights, right? Top $10 committed stocks, American Express. Oh, sorry, Apple is number 1, then Amex. I guess no guesses around Amex. Warren Buffett, Berkshire Hathaway still hold Amex. So that's still number 2. Coca-Cola probably driven by Berkshire Hathaway. If you look at it, we should be able to find that out. Yeah, Berkshire Hathaway has got what, $30 billion in Coca-Cola out of overall $31 billion, right? So Warren Buffett alone is driving these 2 companies. Occidental Petroleum, I guess, again coming from Berkshire Hathaway. Most widely owned, we looked at Google. Second is Microsoft, despite the fact that this guy, Buffett Gates Foundation sold 100% of their stocks in Microsoft. Remind me later to look at Gates Foundation quarter over quarter changes. But they completely sold off Microsoft, but still Microsoft is owned by at least 49 funds out of 105, right? 50%. I'm just picking representative data. So the funds are still big on a lot of these Max 7 companies. So I do share some of these themes on Twitter, and I think I posted for the Max 7. So let me go through that first. So that, where's my, yeah, so basically looking at a theme of, is Max 7 or Lax 7? Tesla was never a fund manager's favorite, so exclude Tesla and look at these 6 companies. Some of it I already showed you in terms of dollar committed. These are the occupy 5 slots in top $10 committed, right? So dollar committed, 5 of them are part of the Max 6. How many funds hold it? Again, a lot of them Max 6 are part of this in terms of the fund ownership, the breadth of Wall Street or the fund managers. Ongoing conviction means, I mean, not only that I have committed dollars, not only it's a consensus trade that most of the funds own it, but they also have a conviction in this. Look at how many were the new or added position. You'll see a lot of Max 6 like Meta, Amazon, Apple, Alphabet, Nvidia. 5 of them are here. Microsoft, right? And new dollars attracted, which I think the only one is just the Microsoft. So I don't think this is dead. Max 7, that Wall Street is running away from Max 7 onto other, a lot of individual investors, we are running away to some of the other shiny objects. We look at a SanDisk and see who owns SanDisk. How many funds own SanDisk, right? This has been like one of a very, I would say, favorite stock of retail investors. Some of these memory stocks. And now it's the time to look at, is it only retail that's been driving it, or is it also institutional money that had, their hand and feet in that particular stock? To me, and this all is at the end of Q1 2026. Things could have changed. We will know it in the next 30 and a filing. Right? What else? top bets we already looked at. SailPoint is one, wherein I guess, let's see who else owns SailPoint. Yeah, only Thoma Bravo has got the 95% of his portfolio in that. Carvana is number two. Some people are taking degen positions in Carvana. CAS Investment Partners. If I recall, they've been with Carvana for many years. Right? And maybe we can look at their history of data, because now we have a capability to look at their history. Greenox was the new name for me. It's like 57% of Greenix portfolio is in Carvana. Right? So if you are interested in Carvana, you should not read about what Pershinska or anyone else have to say. You should go and read about investment thesis coming from these two people. This is where this data becomes helpful for you and I to look at, those who put most money behind it. I want to know what their thesis was. Someone has their hand up. Yeah, go ahead, Vinay.
So Vivek, is there a way to figure out the new positions that these guys have taken into new companies, right? Because instead of the existing position, it would be helpful to know what are some of the new companies these guys are eyeing to see where we could work, invest with them in a way.
So you tell me, the fund manager will get to know what are the new companies. So right now I'm just looking at the overall summary. I have not even gone to the individual fund manager. Yeah, so individual fund manager will know what they sold, what they bought, what they reduced, what they added, and what the net position is.
Okay.
Right. Next, Fairholme Capital. I want to see if it is all okay. It's all right. So it's only their own stuff. Intel, Nvidia's is Intel. Wells Fargo Daily Journals, 46% Wells Fargo. I'll ignore this. This will tell you the top 10 holdings by fund manager. We can now, if no further questions on overall, now I can go to the fund manager view and see how the individual fund managers have been doing. Now you can bring up all your questions on, okay, who did what? Give me a fund manager that you want to talk about. Otherwise, I'm going to go what most of the people generally talks about, right? Berkshire Hathaway. Otherwise, you just put a name on the chat if you want to look at position of any fund manager. So look at a Berkshire Hathaway. The top position is still Apple. Apple is 22%. And they did not, they did not reduce Apple in this quarter. In terms of, so we want to see what new stuff they added. Delta, Google, and Macy's. Google Class C. Or they had a Class A, which they almost tripled their position in Class A, and then they added Class C shares as well. So Berkshire is actually going big on Google. And maybe in another view, we can actually look at a Berkshire and see what else they've been doing. Berkshire Hathaway. Let's look at last 3 years of data, maybe 4 years of data. Okay, 4 year won't fit in. I don't want to make it eye test. Are the numbers visible? Or is this eye test? Maybe I look at 3 years worth of data, starting for 2023. Let's do it. And zoom in a little bit. Okay. So Apple is the topmost position. There are no change in Apple in Q4. Then we're looking at, even though I added Google, Google is still much smaller position for them, right? Google is what? Alphabet. Alphabet is Class A. They got a $15 billion in Alphabet, right? Stuff on Berkshire Hathaway. I actually have a data for 13 years. I looked at 13 years, and they never sold any shares of Coca-Cola and Amex. And the third one is the ketchup. Even though Berkshire has been selling and buy some other stocks, 3 stocks which they did nothing. The Cherry Coke and his card and his ketchup, right? There's been absolutely zero activity on these three stocks. Of course, they've been buying Occidental Petroleum, but yeah, that's a position from Berkshire Hathaway. Unless you want to
Actually,
look at,
Vivek, their pricing, their holding price is in negative because they hold it so long and that dividend reinvestment and all
yeah,
this, their holding price is in negative. It doesn't make it a free ride now.
yeah. Again, it's how you look at from a mindset perspective. Like for some of the stocks, my holding price is negative, right? But then if the stock goes down 20%, it does impact a portfolio, right? So from that perspective, sure, if this business is dying, why would you still hold it? Because it will impact your portfolio, even if your cost basis is zero, right? So,
I have a
but
theory there. I have a theory there. So I've been kind of trying to understand why they have some stocks there. So what is a cash position? So it's basically most of the stocks he has for a long time, they are basically have very high dividend rates, and that's kind of a cash cow. So so basically they keep accumulating the cash over the time, and that's what they use to deploy rather
correct.
than using that as an income. And the taxes side of it, so basically I think why you and me pay taxes versus these guys. So basically there's I forgot that clause in the tax book. So if you transfer the like kind of investment, you don't pay taxes. I'm not saying 1031. This is kind of another kind of a transfer, but you should be the one managing someone else's money. In that case, it applies. So Berkshire manages other people's money.
Yeah. So I mean, I'm not going to do the reason, but this is like if I look at Amex and Coca-Cola over the last 13 years, absolutely no movement, right? Which is amazing. You can just sit tight on these stocks for so many years for all the reasons that Vishal you might have given. Could be because of that, or because hey, it's a house money anyway. But kudos to them. And there are, I think, 3 or 4 stocks I found. Moody's is another one. I don't recall if I looked at all 13 years for Moody's, but yeah, there are some stocks which they are just sitting there. Looking at the new ones, so they bought Delta, Alphabet, and Macy's. And what did they reduce? Out of Constellation Brands, Warren Buffett doesn't like beers, looks like. Nucor, Chevron is reduced by 35%. So again, if your investing thesis was Berkshire bought it, and that's why you bought Constellation Brands, Berkshire sold 95% of their Constellation Brands. So this is where it will help you if you are following some of these fund managers and seeing what they're doing. Not only these, he sold off a lot of holding this time, which is very not typical of Berkshire Hathaway, right? They're outside image, they're supposed to be long-term owners of the stocks, but look at the amount of selling this that happens on Berkshire Hathaway in Q4. Completely exited these businesses. Lamar, Heiko, Liberty, Visa, MasterCard, United Health. I know some of you got into United Health because Berkshire bought it. Berkshire is 100% out. Domino's, Aon, so on and so forth. There is some theory that is circulating in the market that these investments were done by Todd Combs, who then left Berkshire Hathaway and joined JP Morgan. He was one of the 2 investment managers that Berkshire had. And Berkshire said, hey, okay, Todd is gone. We're unwinding all his positions. Again, I don't know what the truth is, but this is somewhere I saw on Twitter chatter is these were all done by Todd. Again, no one knows what the reality is because Berkshire never declares who was all the decisions were approved by Warren Buffett. Idea could have been brought by Todd. Who knows? But I never seen so much of a selling by Berkshire Hathaway in so many quarters. If you look at it, this has been the most selling quarter. Yeah, last quarter they sold 4, prior quarter 1. Okay, I have more than 1 page in, so there could be more, but yeah, no, I've not seen so many sales. This has been the most sales looking at the last 4 years.
So Do we know the net of sell versus buy? Maybe they're building the cash position with thinking that the market is going to crash. And
Yeah,
then
so right now their portfolio value is $263 billion. In Q4, it was $274 billion. So overall portfolio value has come down as of that previous quarter. If you want to look at a previous year, it was Q1, it was 258. Not much of a change, right?
Yeah.
There's been 270s. Like I would look at it. In fact, it has been going down. They were higher. Okay, 2021 was crazy days. Yeah. So overall, more cash, maybe more cash, and the less of an equity position. Equity position has been coming down.
So
All
looking,
right.
they're
Any
looking for
other?
a kill. They're looking for going for a kill when the market crashes.
That he always wait for, right? He's not even able to find the business that they are, that they can deploy huge capital in. Any other fund manager? That's it.
Cobra, your favorite.
PubRai. I don't think I have a PubRai's one because there's only one fund which is publicly filed, which has got, and I was able to scrape the data. So I don't have PubRai funds. I tried it.
Okay.
It's not under 13F, it's something else. Maybe they file ADV. Altimeter, yes, I have Altimeter, I have Kutu. Altimeter. 5.6 billion at end of this one. So what did they? So biggest position on Altimeter is Nvidia, right? 1.6 billion. Meta number 2. Uber is number 3. Uber is back on number 3. Did they not sell Uber sometimes? Let's go back to say Altimeter. Also look at how did they. What did they do with Uber? Oh, so Uber, they sold off Uber 60% of their Uber position in Q4. That's why I recall they sold some Uber. Okay, then they bought a little bit. Now they increase their Uber position by almost 40% in Q1. Okay, Taiwan Semi and so on and so forth. What did they buy new? Arm Holdings and Exxon. Okay, Rick Smith, Exxon. These are the companies that bought new. Bigger conviction in Arm Holdings, 4.5% as like a first new position. And then Exxon is 1.1%, started smaller. What surprised me was them getting out of this is, oh, that was, I think, Kotu. I got confused with the Kotu. They sold their Google positions at the end of Q1, right? So if you look at end of Q1, Google, oh, sorry, I had, okay, better. I have to go there. Q1. And this is where you just can't follow all other people blindly. End of Q1, we're talking about this. Right? Or they could have sold any point of a time out here. We don't know when did they sell. But this filing is as of end of Q1, they're 0 Google. And what Google has done since then? Nothing but it's just gone up high. Google is almost up 30% since then. So after, even smartest investors cannot time the markets. That was so difficult to time the market. They sold off the Mercado Libre. Come on, this is my favorite stock. Why did it ditch it? Okay, I might need to look at a stock level. Who else owns Mercado Libre? So we'll get to that. So remind me to look at Mercado Libre later. They sold all their Shopify, 100%, but Shopify was $91 million position anyway. The biggest position was Coupang. They ditched it, didn't have patience, and Confluent, they sold it. So next time you see Brad Gerstner coming and talking about how great Confluent is, questioning why did you sell off your positions? It was so great, right? So reduced 4, exited 7. It shows only top 20. Maybe let's look at all positions. I didn't realize I had a filter on. No, they have only these positions. What other investor? He said Coatue. Coatue. $29 billion invested. Biggest position is TSM. I love it. They added a little bit on TSM. Second is G Vernova, Lam Research, Eaton. I think all these top 5 positions are all AI plays, right? Data center positions. First is chip fabricator, energy, chip equipment manufacturer. Same is the case with that, and ASIC manufacturer, right? Or ASIC designer. TSMC manufactures for them. This is Eaton is your electrical supplies and all the connections, all data center related. I think all are related to the data centers. Then comes to the Amazon hyperscaler, Meta, Constellation Energy. Again, these are all AI plays. Equinix is probably Equinix. I think this is the data center REIT, right? It's all the play on data centers. So yeah, that's Coatue. Now, what surprised me on Coatue? Let's first look at their overall new positions. Bought a lot of new positions in. Equinix, ASML, great, love it. I hold it. Solstice Advanced Material. I have no, but this is like $126 million position. I won't go pay much attention to anything which is like below 1%. So I'll ignore other stuff. Equinix and ASML holdings. Now, if you're interested in Equinix, should you go and read Coatue's thesis? I don't know. We should look at who else owns what's the ticker? EQUINIX. If I'm getting interested in Equinix, I would go and read. I will go and read Coatue's thesis, because all other fund managers have smaller dollar value or portfolio percent committed to it. If you want to read thesis of Uber, should I read Altimeter? I don't know. Let's find out. Should I be reading Altimeter's thesis, or no? I should be looking at Pershing Square Capital and see what Bill Ackman has to say. He has got 15% of his portfolio in Uber, $2.1 billion. Going back to Coatue, what did they sell? So I'll first look at what did they reduce. What happened? These are the besties. Sold off 96% of his Tesla position. Like Altimeter, these are all in besties. But I guess when it comes to business, no one is a friend, right? It's all business, dude. So Coatue sold all his Tesla. This is Coatue. Sorry, I got confused with Altimeter. Coatue sold all Tesla, DoorDash, Carvana, Synopsys, 50% of their holdings in Microsoft they sold. Actually, Microsoft had a lot of selling in it. I did tweet about it because Bill Ackman bought Microsoft. So I did tweet about it, saying if it was not for Bill Ackman, or this is another player who bought Microsoft. Which one was there? If you look at this Microsoft, these two, Dodge and Cox, I respect them. Pershing Square Capital, look at the incessant selling that has been happening in Microsoft from many fund managers. Some of them are known to be, tech investors. Like Bailey Gifford has been selling Microsoft. Now this quarter they sold off 30%. Tiger Global sold 54%. Coatue we just looked at 52%. So yeah, Microsoft had a lot of selling. Dodge and Cox have been selling it for many quarters and then up their position by 60%. So if I were to look at, I probably want to go and read what did Dodge and Cox find about in Google this quarter, because that changes their thinking about Google. They've been selling Google for many quarters, and now suddenly they're like, oh, we should buy Google. Right? This is the fund managers I want to study, because it means they found something which was really attractive and made them from being bearish to bullish, completely flip. So we're looking at a Google, maybe go and look at these two funds and read their report and what the fund managers have to say about Google and its potential. Okay. All right. Yeah, and let's look at what did they exit completely. Okay, won't sort on exit because I always want to keep it at the end. What did they exit? Infosys, Marvell, Moody's, Navan, Snowflake, Oracle, Adobe. Yeah. Biggest exit was 865 Oracle. That was almost a $800 million Oracle is what they've exited. Taking a look at situational awareness, that guy, I think he filed only confidentially, so the numbers are not available. So SEC does grant this privilege or exception to fund managers who may be in process of still building their positions and say, hey, we want to don't want to let disclose, and we want to file it confidentially. So what I know is situational awareness basically filed confidentially, and there is so the data is not available, and I know that guy has become a rage on internet. Left, did he leave OpenAI? Was it Anthropic? And then became a fund manager and bought all these AI stocks. So situational awareness has become a big talk. Let's see. Now it only has last year's of data, last quarter of data, because they have not filed publicly yet. And there are some other fund managers. I recall I looked at Norges Bank, and I found a pattern in Norges Bank. I'm like, why every quarter their position goes to zero, and then when I researched, I found out that they will file confidentially on every odd quarter, and then the real number is every even quarter. So Q2 you will see position, Q3 becomes zero. So it messed up all the data. I said I don't want to track Norges, so I had to remove it. But then I realized, okay, there are some exceptions that you can apply for with SEC. So situational awareness hasn't filed it publicly yet. But this is their Q4, unless you're interested in looking at their Q4. Okay, any other fund manager? Or did I get a thing? What about Dynamic Select by BlackRock? Paul, what do you mean by that? I mean, BlackRock, I don't think they filed 13 Fs. At least I'm not tracking, but they're not like fund managers. Bailey Gifford is popular among tech people. And when you look at Bailey Gifford, biggest position, NVIDIA, Amazon, Mercado Libre, Spotify, New Holdings, Shopify, Cloudflare, C Limited, PDD, AppLovin, Meta Platforms. Reduce 175. Wow. What did they buy new? Any big new positions? Nah. Nothing the new one that excites me. There's a lot of them are a very small portion. Any other fund manager? If possible, who is the biggest exit to? Sorry, Murali, this is for which ticker? Uber. So Uber we looked at, right? So Uber we looked at the position on Uber. So who is the biggest exit? So let's go back and we were looking at a stock level. Uber. No one exited in Q1. I don't see any exit in Q1, at least this 100 plus fund managers that I track. And these are the mostly one talked about in the media and Twitter. No one exited Q1 in Q1. Of course, over the long term, I've seen some of them actually exiting. Let's look at over, let's say, last 3 years, starting from Q1 2023 to this year. You'll find out who have been coming in and out. Oh, not NHS, Uber. Why did it select NHS? Oh, because that was wrong selection. I don't really know. This will tell you, so Pershing Square has got a biggest holding, $2.1 billion. No complete exit, but yeah, a little bit of a reduction. Oaktree had exited in Q4, but they bought back again. Octahedron exited in Q4. And then there are some funds who have exited earlier. But this is overall position on. I don't see many exits on Uber except Oaktree, and they bought it back. They realized maybe it is a mistake. Who knows? On last 3 years. There have been some reductions, etc., but not too many exits. So 18 funds actually own Uber. Okay. Bridgewater. Yeah, Bridgewater is like down 7%. You're right. Bridgewater exited. Go ahead, Sam. You have a question?
No, it's just a comment. You know, King Microsoft was going down, but I noticed my other stocks were going up. You know, when I was in China, I kept on asking, when's the next great stock market fall? And people said, well, we work in one sector is going down, one's going up. They don't all collapse. Like the U.S. kind of collapse all at once in a while.
No,
But-
China, don't tell me, because China has also been, overall the market hasn't done much in last 10,
Oh, well, no,
15
I
years.
wasn't saying that. But what I'm saying is that now King Microsoft is going down in my portfolio, but other companies are
Yeah.
probably coming up to
Correct.
bring up my portfolio to its highs about 6 months ago.
True. I like Markel. They've been building up positions, never had any down, never sold their position in Uber, starting building since Q2 2023. But yeah, so I like Markel. Any other fund manager first? Any other fund manager you want to look at? Although we'll get back to 13F otherwise, after the next quarter. Or if you're in the waitlist beta, you can run all these analyses yourself. This is a part of the overall optimizer. No? Let's look at the stock wise. I mean, I spend a lot of time at a stock level to try to figure out, especially the stocks that I own. And I want to look at one of my biggest positions. Shouldn't be any surprise. Who owns Mercado Libre? Durable. Sorry, let's look at from a value perspective. Belly Gifford is the biggest one. Devon Capital, Durable, Poland. Not the Belly Gifford, I know. Poland, Tiger, I know. But beyond that, not much conviction from Wall Street. Altimeter sold off their position, Whale Rock and Octahedron as well. Atreides hasn't filed yet, Gavin Beckers. So he hasn't filed 13F yet. Overall, almost $1 billion came out of Mercado Libre as compared to previous quarter. 3 new initiated positions, 3 funds exited it. But I think not a huge change. Let's look at Microsoft. That's where I was surprised that Microsoft basically had almost $40 billion and then $20 billion came out, 50% AUM down in Microsoft across these funds. Now only 19 billion remains. Right now, like huge selling on Microsoft in Q4. And I guess there are folks who also exited their position in Microsoft. So Gates Foundation sold off completely. Their $3.7 billion position in Microsoft completely out. So some of the reduction of this $19 billion, $3 billion came from Gates, $1.5 billion from Viking, and so on and so forth. So yeah, so when market says, oh, Microsoft sold off, even though 26 fund managers bought Microsoft, but essentially a lot of dollars have come out of Microsoft as compared to last quarter. It has also to do with in terms of that the price has also come down, but in any case, it is what it is. It is basically AUM on Microsoft. There was a chart I saw Netflix. Let's look at Netflix. Bailey Gifford is the biggest investor in Netflix. SRS, Coatue, Gardner Russo. Who added Netflix? Oops, sorry, Semper Augustus, which is Chris, a very small portion. I won't fuss about that. Yeah. So not too much of a love in terms of new excitement on Netflix. But Bailey Gifford is sold 40% of his Netflix position in Q1. So I want to see what happening on Netflix as a trend. Is it one-off? Is it like widespread among fund managers? No, I don't think I can look at any pattern. So Bailey Gifford bought Netflix. I think this was more of a trade in terms of opportunistically. When Netflix, basically the stock fell down after they were trying to buy Paramount. And so I think they sensed an opportunity, took a position. Now basically sold off 40% of it. Who else? SRS, I don't know about them. Coatue. Yeah, same stuff. Q4 bought a huge chunk. Wow. From 618,000 shares to 10 million shares in Q4. That's a huge conviction. I should have had this view last quarter. Unfortunately, I did not have an ability to view this across the funds, but glad, okay, we have it now. I did not know about it. That's some huge conviction. 0.72 is more of trader, so I will ignore that. And then this, yeah, I wouldn't blame, let's say, Bailey Gifford or Coatue selling off 40% of the Netflix positions. But if you just look at a Netflix individually, you would worry about why the heck they are selling this. Right? But if you look at from a trend perspective, come on, this was I mean, yeah, take some money, take some chips off the table. Take some money off the table. You basically 10x your position in terms of Bailey Gifford, they 10x their Netflix position. In terms of a Coatue, they're like 165x their position. Yeah, so it's okay to take some chips off the table, guys. I don't blame them. Ritholtz, Josh Brown. But again, the rest are very small investments. Won't pay too much attention. So, no, I'm not worried. Whoever asked Netflix, I hope this helps you. Someone had asked Netflix, I saw some comment. Okay, any other ticker? No Know the ticker? We're done with 13 Fs sooner than I anticipated. CBOE. CBOE. Not much love on CBOE. No, not institutional investors. There are, yeah, I don't see. Let's see some of the favorite stuff, right? SanDisk at the end of Q1. Whale Rock Capital probably would be happy. At the end of Q1, they held 6% SanDisk. If they're not sold after March 31st, they should be in a happy camper. SNDK, SNDK. We're looking at a March, and yeah, like 500. They almost tripled their investment in SanDisk. Shopify, SHOP. Belly Gaffer is the highest. Altimeter and Soros, they sold off Shopify, but again, Altimeter was like, say, $90 million. When you're looking at $4 billion, $90 million, not that big a deal, but they did see almost $2.5 billion coming out in Q1. No new, two new positions, Octahedron Wealth Group, and 2 exits on Shopify. Now, if you want me to look at the trend across the fund manager for your ticker, do let me know. Otherwise, right now I'm only looking at their positions for the end of that quarter. What are you talking about here? Poland Capital, ServiceNow. I think it'll be interesting to look at how each of the fund managers or how the trend has been. Given the fact that we had a Sasocalypse going on, did Wall Street get scared out of ServiceNow? Let's find out. No, where's ServiceNow? The road, go back. Who else? 4 new, but very small positions. I'll ignore it. Who sold off? $200 million position. Bridgewater sold off ServiceNow. 3 reductions we see in ServiceNow. Tiger, Octahedron Ritholtz. ServiceNow. I see a lot of buys in Q4. Yeah, a lot of buys were in. To me, this looks like I see more buys or increase in positions, either new or etc., especially among this community over the last quarter and this quarter. Prior, there have been some sell-offs. But I think this may be what dip buying from money managers. That's all I can gather from here. Maybe some dip buying going in on now. So if you are looking to buy the dip, I think this could be will give you some comfort that money managers are with you. Okay, Coatue owned and they exited it in Q1 2025. Which other stuff we got? SNDK, we already looked at SNDK. GLW, which is Corning. Lone Pile, I like Lone Pile, guys. But yeah, then Appaloosa, David Tapper had 2.5% position, but they reduced it. Except Lone Pile, which has started with a new position with 4% of AUM committed to Corning. not much of a love coming. Point State Bridgewater sold off completely. I don't know what the media, they might come and say in a media, could be a different thing. But, and this is again at the end of Q1. Things could have changed after that. That's what you have to be aware of. At the end of a Q1, doesn't look like that money managers were like increasing or adding to their positions in Corning, except Lone Pine Capital. So if you want to read about Corning, go and scour the investment managers from Lone Pine Capital and see what they have to say about it. All others are don't have much skin in the game. Starbucks, SBUX. In Poland Capital has 3% position, even though they reduced it. Some smaller new positions came in. 13 funds hold it. 4 new positions, all very small, 2 million, 2.2 million. No exits. So this has been mostly a story of wait and watch, I guess, for business to turn around. Right? Some of them have put in a little bit of money, but it's mostly wait and watch. And of course, Brian Niccol is a new CEO. I don't know if I call them a new, but he's trying to turn Starbucks around. Which, I mean, if you visit Starbucks, I found a difference in terms of Starbucks over the last 6 months. And once I went in, I'm like, I'm at the same place because they changed the whole place. They made it a little more friendly to have conversations, like in person. They changed the seating arrangements, put some nice, sofas, etc. You can go and sit with a group. So I like it. I can't comment on the service speed and all that because I just generally go and order it in the store. So I don't know. I've not seen any change in terms of the waiting time in the store. But from an ambience perspective, from an atmosphere perspective, they changed it and it is more crowded. Then and probably I think more crowded could be specific location because I know there is one other Starbucks nearby that they closed. So I guess both the crowd are coming to one location. So ignore that comment, but I think the atmosphere was much better in terms of a lot more inviting atmosphere. That's a boots on the ground research. INTI. Oh, in INTL. Pranav, did you mean Intel or IN? Is there anything INTL?
Intel, yeah.
Then it will be INTC. NVIDIA has 50% of its investable funds under Intel. That we know they started with $5 billion, right? And now they're up to $10 million. Hold on. INTC. I thought their initial investment was $5 billion, but I don't, maybe they added it? Or did they start with $10 billion? No, I think they started, oh, no, the stock price could have changed. So they didn't add any more to the stock. But yeah, in Q4 2024, they had almost 215 million shares, still kept the same. Yeah, I guess that's the only story. Otherwise, all are small investments. And some of these, so situational awareness, a 3D, they had a position last quarter, but they haven't filed their 13F this year. So I don't know. Once their 13F is available, we may see a difference, but for now, they haven't filed it. But yeah, apart from NVIDIA, that the investment that they made last quarter, not much love for Intel, guys, from Wall Street firms. So now coming back here, yeah, it's a small position for these people. Right. Yeah, it's only Intel. Big player is only Intel. Oops. Oh, sorry. Yeah. Oh, sorry. Share the wrong URL for the waitlist. That's a local dev environment. Yeah, so please change it to .com. Get confused when you have too many browsers open in terms of which URL I was looking at. Then we got TTD.
So government invested a lot in Intel. How
Government
did you
doesn't
check
file
that?
13F.
Oh, okay.
TTD. Not much love on TTD. And didn't much happen in terms of like I did TTD have a lot of institutional interest? Was never able to look at it, but now we have an ability to look at it, so why not? Not too much of interest in TTD from fund managers. Like only last 3 years, like 6 or 7 funds who have dabbled in TTD. Maybe let's go further down. When this stock became hot, let's get to the COVID side and see if we see a lot more participation. Still not. Max 10 over the last 6 years. It's only 10 funds that have dabbled in TTD out of these 100 plus funds. Not much love on TTD. Rajiv, yeah, good comment. Google is AI, Microsoft is OAI. What else? Any other ticker? I see Starbucks trying to compete with the smoothie companies. Possibly because they are bringing in these more healthier drinks, but also what I heard is Brian Nickel is trying to rationalize and reduce the number of combinations or the SKUs that baristas will be able to serve. Because what they realized was their whole SKUs were just going haywire, right? Especially the younger generation. When they come and give the order, they rattle like 7, 10 customizations on, my own kids do it. I want this and this and this and this. I'm like, how do you remember all these things? My order is plain, is like cafe latte extra hot. my only thing is like make it extra hot. And but no, dad, we want all this. But up to a certain level, it's okay. And then the business start to suffer when they have a lot more customization. So they've cut down and simplified their menu by a lot. That's one thing which Brian Nickel has done. They say we are trying to not do everything for everyone. We want to simplify our menu. And yeah, get into other healthier drinks that could be another way to stay ahead in the game. We look at a Starbucks result maybe. I don't own Starbucks, so I generally don't follow much on that. Okay, Sean says, helpful. Welcome, Sean. Adobe. Adobe. Wow. 4 new positions, but smaller positions. 3 million, 2 million. The exits were bigger. Cotu was the biggest exit. I got $305 million. But Dodge and Cox added 15%. They upped their position by 15%. They own almost $600 million of Adobe. I would say it is equally spread. Poland Capital sold off completely, almost 99%. 0.72, they're mostly on the trader, so can't depend on 0.72 as a long-term holder. Cantillon Capital reduced by 12%. So I guess it's a mixed bag on Adobe. Let's look at how they did over a longer period of time. Let's see if there's anything gained from them. Cantillon have been adding to their position, and then they sold. So I won't blame them. But Dodge and Cox, they've sold for many quarters, guys. Wow. Ooh, they opened new, I guess, no, probably it is that they held their position. They probably owned it before. They owned it for more than 6 years and have been reducing their position. And then suddenly, like, bought up 80x times from 20K to 1.6 million. So I don't blame them and then they added more. And then they added more. So Dodge and Cox has suddenly built a lot of a conviction on Adobe. So you should look into that. It depends on what kind of investor these folks are, right? It is a cash flow business. The potential is being questioned, right? But we haven't seen the reduction in revenue or anything like that yet on Adobe. Let's look at Adobe as a company. Still, revenue growth is still consistent 10-11% over the last 5 years. It's all about the terminal value. That is what the street is questioning in wake of all these AI tools. Right? I don't think the street is questioning that, hey, what's going to happen to Adobe next 1 year, 2 year, 3 year? Well, all they're worried about it, what's going to happen 20 years down the line? Will this still be a relevant business? That's what has been driving the sentiment. It's all the question around the terminal value.
That's true for all the SaaS companies, right?
Exactly. I mean, we haven't seen many of the SaaS companies actually business deteriorated as much as the stock has already deteriorated. It's all look at the margins and the free cash flow margin. It's a good cash generator business, right? And if I run Adobe, and sorry, this will go on my admin profile. Okay, and this will become a part of Optimizer at some point of a time. I haven't integrated this fundamental analysis into Optimizer yet. I'm not on local, right? Okay, it's not fetching all the data, but this will become part of it as a little later. But let me pull Adobe data, right? If you just look at the numbers, I will love these numbers. 35% return on invested capital. You're looking at 36% operating margin, right? And like the more the green boxes are in, the better I like the company. I'm looking at 1 year, 3 year, 5 year, 10 year, 15-year average. It's not that they've been, maybe there's some tailwind happening, which is causing the stock or the business to perform well. Over the last 15 years, it's a good business. The question is all around what's going to happen to the terminal value. So, and it gives a decent amount of a dividend good buyback. They continue to buy back their shares. And why not? If your share is punished, look, this is where the smart management should do, right? They were buying back close to 4%. And you realize that market is punishing the stock, they basically upped their buyback. Now they bought back almost 8% of the shares. So if you're an investor, what a stable business, and you think that AI cannot disrupt, which is what the market is pricing in, I somehow feel that it could be a tailwind for them. But future is very uncertain. Tomorrow you don't know what Claude might come up with. But from an existing business and the history, how they're managing, it's an amazing company. I mean, they've proven it. The numbers show it. Is that the market is only concerned about the story of the future. I still need to fix some of these things before I integrate into Optimizer, so that's why sitting in a separate location. Okay, let's get back to what we were looking at, Adobe. What else? Thomson Reuters. Can you give me the ticker for Thomson Reuters? I don't think I've ever looked at Thomson Reuters. THOMSON. TRI. It'd be interesting to pull data for TRI. Okay, while it pull the data and run through the model. No, not much interest on Thomson Reuters this quarter. Looks like even the last quarter there hasn't been many because there have been only one exit. So yeah, it's like it's nothing burger. TRI. Has it always been like this? I don't know. I've never looked at the stock. Oops. TRI. Okay, I need to fix the search. Okay, THOMSON. Okay, Thomson Reuters. Yeah, I don't see too much of an institutional interest in Thomson Reuters. Like prior to 2023 Q2, many of the funds that are reported in the 30.5, they never had Thomson Reuters. Space RKLB. Okay, hold on to that. Let's move on. We're already 12, so let's move on to what I love about this is not looking at an individual stock, but looking at a theme level. Right? Let's say AI theme is working, or is it EV theme is working, right? And then there are stocks underneath it. There's some people buy some stocks, some might dump, but you want to know overall at a thematic level, at a sector level, is it more money coming in, coming out, who owns what? So again, I don't think anyone this available anywhere. So, but what I want to look at it, and you can tell me some other things. So I do track it in terms of advertising tech, Chinese stocks, crypto, cybersecurity, e-commerce, EV, energy, fintech, healthcare, Max 7, retail favorites like DIY investor favorites, SaaS, and semiconductor. These are the themes that I have pre-made. If there's another theme that you think we should track and will be useful, do let me know. Right, but I'll go with one by one on these. And so ad tech, right? And I have considered Adobe because that's AppLovin, TTD, Roku, DoubleVerify, Magnite, APPS. It's called App Engine, something like that, and PubMatic, right? Any other ticker you want to add to this? So overall, $6 billion in this. Bailey Gifford has the highest with AppLovin, I guess.
Should you not consider Google and Meta in this one? Because in the advertising tech, I think they are the dominant players. Even though Amazon is entering in the space.
Yeah, but Google has a lot of, yeah, you can say Google. Let's add Google.
Even Amazon is disrupting now. So
Amazon they got into the DSP space.
Yep.
Yeah. But I think then it's gonna basically change all the numbers. Right? Google, Amazon, they will always be on the top because I guess Google, I can consider Google. Amazon, I would not want to add it because it's gonna, a lot of valuation on Amazon not coming from ad side, but it is coming mostly from their AWS side, right? But Google, again, I mean, it's not an ad tech, but it's on the search business. Right? What I don't know is how much of a Google revenue is on the technology that they supply to others. Right? Otherwise, it's gonna just skew the numbers in terms of most money is invested in Google, but it could be because of Google Cloud, it could be because of their research, it could be because of all other businesses that Google hold, right? YouTube. So that's why I did not put Google. I think someone else also brought up the Google. That's why I did not have Google. But once I open this up, you want to analyze it, you can add 5 tickers.
You can take it out. That's fine. I was just saying, Google and because YouTube revenue is more than Netflix revenue.
Yeah, YouTube is number 1. I know YouTube is more revenue than Netflix. It's a big business inside Google, right? But again, YouTube is not a ad tech company. right?
Renting space, kind of. That's the way I see it. They're renting space for people to come and create content, display it, make money, and get out. We'll put us something else to. It's like a hoarding board, right?
Yeah,
You
yeah.
do advertisement, you advertise, you get out, get a new one.
So maybe we need a, so I'm talking about the companies that supply the technology behind the hoarding boards, your lighting technology or the LEDs that go on the hoarding boards. Right.
Got it. Okay, cool. Thanks.
So yeah, so maybe suggest me another category and the takers under it will add the category. So that's on ad tech. Anything specific catch your attention? I mean, Roku has got only $90 million. Yeah. Next is Chinese stocks. Because I filtered out anything which is less than $50 million. So Chinese, okay, why? Okay, need to fix. If you switch theme, the ticker should disappear. Where we are in Chinese stocks. So $7.7 billion invested in Chinese stocks. PDD, wow. It's not Alibaba. Okay, that changed my thesis. I never owned PDD, but I should go and study about PDD. It's like price of
Vivek,
Alibaba's investment.
thank you for studying on PDD because I bought Meituan a couple months ago because it's supposedly superior to PDD. Their site, their what they're doing, and PDD. None of my Shanghai friends ever use PDD, so I don't. It's just kind of luck of the draw.
Yeah, I mean, I'm looking at where the money is flowing. In terms of Chinese stocks, more money is flown in PDD than where we're looking at themes. Then Alibaba. Okay, I did not expect. I knew PDD is a little bigger, but I did not expect the difference to be like double, right? And then there are JD, Yum China, NetEase, and Tencent Music, so on and so forth. XPav. Any other Chinese stock you want to add? So I got JD, Li Auto, MNSO. I think last quarter some of you gave. I don't even know what the stock is. TL. This is Techie is Tencent. But yeah, so overall we're looking at $7 billion. And yesterday I was thinking about how do I build a QQ quarter-over-quarter change at a theme level. And it has come down from $11 billion to $7 billion. Okay, hold on. Don't put any filter. It doesn't make a change. It's only $11 billion. Yeah, so $11 billion to $7 billion overall investment in China. So Wall Street has pulled investment out in China collectively. There will be some individual fund managers who probably gone bullish. Some would have gone extremely bearish. Collectively, there's been money that has come out. Okay, next one, crypto. So I got all these crypto stocks like ARKB, Bitmine. This is Sol ETF. ETH is Ethereum ETF. And ETH, IBIT, MSTR, MetaPlanet, Nakamoto, so on and so forth. No love for, especially all this fund manager reporting, no entries found for all these. Only, I think the biggest one is, of course, Coinbase, $311 million, but not big conviction. So these are the shiny objects. We get super excited about these things. Coinbase and hoods of the world. If you look at an institutional side, yeah, $90 million. Where we're talking about, I think maybe I should put a stat of overall AUM. It probably may be close to $2 trillion or $1.5 trillion. let me take a note. Total AUM. There are a few more enhancements I want to do there. And $90 million in Hood of the total investment of like trillion plus. Drop in the bucket. Doesn't even matter. We get super excited about Hood. A lot of retail investors. Any other ticker you want to add for crypto tracking? No. All right, let's move on to the next one. Cybersecurity. Security professionals in the meeting. This is how the cybersecurity has done. Over $5 billion AUM in this theme, and this theme covers basically the big ones that you already know about. Cloudflare, Fortinet, Zscaler, Okta, Palo Alto. Why is IBIT here? Okay, I need to change and remove IBIT. Sentinel-1, CrowdStrike, Qualys, CIBR's ETF, Rapid7, Gen Digital, I guess. This is an ETF, Tenable. Any other company you want to track under the cybersecurity theme? Belly Gifford. So the most love is gone to Cloudflare. Yeah, I think that's garnered the most one. Out of 5 billion, 3.5 billion is with Cloudflare.
Vivek, can you track Wiz?
Which Wiz?
Yeah.
Does Wiz trade publicly?
Oh, not yet.
Google bought it, right?
Yeah, not yet.
Yeah, so it's not there. So it has to be publicly listed because then the fund managers will be able to report their holdings on it. But any other stock I'm missing on the cybersecurity theme? No. All right, let's get to the next theme. E-commerce, one of my favorites. $57 billion, 62 funds hold it. And of course, I think the number one is Amazon, number two is Mercado Libre. Big commerce, no holdings found for big commerce. Who bought Jumia? Where institution woke up in Jumia? This is not sortable. Okay, this is sortable. Discovery. Welcome. Welcome, Discovery, guys. Welcome. Some of those who know, I've been tracking and, on a roller coaster ride with this company for almost now 5 years. But I love the CEO who's been doing all these changes. I still hold it. My investment thesis on this company was for 15 years. No institution ever held any holding. When I jumped into the earnings call, not even one analyst used to be there. It's only institutions started to warm up in last 1 year. Now at least I see 3 or 4 analysts joining the earnings call and asking questions. But for many quarters, a CEO will say, okay, any questions? There's no analyst. Like money was dead on this one. I expect a little more interest in this because this year in the Zone conference, where a lot of these fund managers come and talk about investing ideas. And I listened to the recording of that Zone conference because you get ideas from there, right? Folks like Greenlight Capital, David Anon, he'll come and talk about his ideas, and similarly some of the respectable folks will come and talk about it. So the CEO of Jumia was invited to talk about in a panel and emerging markets, investment in emerging markets. So there is one lady, she basically runs a division of a bigger company focused on emerging markets. And the CEO, Francis Dufay, they were talking. So I guess a little more visibility will come in. But I was surprised. I didn't expect someone actually holding Jumia this time. Let me see. When did they take a position? See, almost not much of a love. They only took a position just now. Yeah, Belly Gifford, I'm aware they bought it. I was not tracking Ritholtz earlier, and they have been a trader, so I'd never paid attention. Okay, yeah, that's an e-commerce theme. Coupang, C Limited, Shopify, PDD, Baba, JD, Global E-commerce, Diallo, DLocal, and Jumia. Anything else on e-commerce? Any other stock that you own related to e-commerce which we are not tracking, and you would love to track? I can add that. But yeah, most love is with Amazon. Second is Mercado Libre. Puts me in a happy camper. I move on to the next theme, EVs. Bailey Gifford is big on Tesla. Who else owns Tesla? No one else owns Tesla. Neo, Lucid, EVGO, Li Auto, XPEV, ChargePoint. This, I guess, is Blink, the charging company. VFS, PSNY, no holdings found. Anything else you want to look at EV? Otherwise, I will just move on. Energy.
Should we add the plug there? Basically, EV has two things, right? One is the car makers, and second is basically the charging infrastructure.
Yeah, I do have a charging, so maybe I missed plug. So let me add plug here, but
Yeah.
this won't save it, so I'll have to take a note. You got
Because most of these sectors like a crypto, I don't understand, I don't invest, so I don't even
yeah,
look
that's
at
fine. Yeah.
e-commerce.
But
I don't
there
look
are
at.
there are some people who are crypto investors.
Yeah, absolutely, yep.
When I hold IBIT and ARKB.
Yeah. I think one of the emerging thing is going on is like what we may want to think in EV. The payment is very fragmented in that space, and there's a lot of work going on. There's there are no emerging players yet, but that space will see someone will emerge from that, and
What
there'll
do
be
you mean payment means? What payment referring to?
so
For
what
the
happens
charging?
is, so basically not money, the charging itself, right? And the charging of the EVs wherever you go. If you run Tesla, then Tesla takes care of it, but other manufacturers, they don't have that infrastructure, so they have to rely on someone else to take care of their payments. That is very
Okay, the
fragmented.
payments are for the charging stuff. Okay, that's what I was
The
calling
charging
about.
is one part of it. Then
Yeah,
there's
yeah,
kind of
but
like a in car. It's like OEM. Through the OEM, what can you do? That is supposed to be disrupted anytime in a couple of years. So
do you know any companies in that space?
I know, but none of them are what do you call
Or
public yet. They're all small players. They're trying to figure it out what to do. And I lead one of the forums on that to set the specifications. But again, that's a very specific. There's a contextual payments is one other one going on. There's a what you call agentic payments going on. So all those will converge somewhere. But again, there's no player as of now. But I think keeping an eye, somebody might change. Maybe Google might come up with something, or maybe Amazon might come up with something. Tesla
Yeah.
might come up with something. You never know. I think keeping an eye might help. But I think charging is one big thing I think we can consider in this space.
Yeah. Okay, so plug again, not too much of a love. $10 million across 1, 2, 3 fund managers. Tesla. Let's look at Tesla. And what the Wall Street firm is doing on Tesla. Bailey Gifford is reducing the position from 29 million shares to 1.3 million shares. Like, this is a trader. SCGE recently opened. Not much. Yeah, so now I can say Altimeter Capital, right? Besties, no love for besties. Bought it, increase it, sold it, bought it, reduce it, sold it. More like no love for your bestie friend. It's mostly swing trading. But that's why Tesla doesn't have much of an institutional investor except Bailey Gifford. That he too has been reducing his position. It's mostly retail money that drives Tesla. Okay, moving to the next theme, energy. Nobody used to talk about energy until AI made them sexy to talk about energy. So there we're talking about Occidental, Chevron, GEV, Constellation Energy is number 4, ExxonMobil, CTRA, OKE, Devon, BE, I guess this is Berkshire, or Brookfield Energy, I guess. Halliburton, Enphase, Fang is one of these. It's some refiner. NEE, probably Nextera, Solar Edge, ENB, Oklo. Oklo, Plug Avin Energy. Okay, TPL, I don't know what TPL is. SMR, super excited. Retail gets super excited about SMR. It's about $5 million investment. That too coming from 0.722, which probably some hedge fund trader has done it. Otherwise, no conviction. Right. So when it comes to the energy part, still sticking with tried and tested big names. I guess Oxy is all Warren Buffett, but even though you look at a Dodge and Cox, they got almost $5 billion in Oxy.
I think there should be two groups here. One is the traditional energy, right? That's where the world runs on. And second is the data center related
AI energy.
Yes, because AI energy is the one which seeing much upswing compared to the traditional energy.
Yeah.
And
maybe let's see. Probably we should put it under the AI theme. I don't have an AI theme.
No, I think AI theme is one. So AI theme is basically this build out. Build out is one theme in AI. Second, in energy will stay there maybe, but they'll see the upswing now because of all those infrastructure they're building. But after that, it will be commoditized. So it will become slow down. But the AI, again, AI also has many layers, right? So build out is one part of it, and then actual LLM is another part of it, and the actual applications emerging out of it, that's where the next boom is going to be. I don't know if you want to skin it that way.
That basically every company will become part of it. Oh, yeah, we'll see in the. You tell me the theme and see which stickers you want to see it. I mean, it doesn't cost me to add anything. But if I start to look at an AI as a theme, I think I thought about it, but then I realized what can even exclude in this, because then all other, like, remember Jensen's 5-layer cake? If we start looking at each layer and it becomes a very unwieldy AI as a big theme in itself.
Right.
Energy and nuclear and gas. Chintan says, okay, 3 separate ones. Okay. Anyway, looking at a fintech. So I got Chime, Clover, 4 payments, Groupon, GPN is, I think, is Groupon. Hood. I think Hood is one which is like $90 million retail favorite, but not much of a SoFi, again, retail favorite, not much of an institutional love. Toast, the same thing. Yeah. I have to fix this. It's a Clover, Sezzle. I know Sezzle. Some of you talked about Sezzle, saying that stock was going gangbusters. What SE? Yeah.
Oh, Vivek, sorry. Could we bring up PG&E when we were talking about energy? Sorry about that.
Okay, PGE.
Do it at your time whenever you fit it in. I'm in no rush.
Okay. I'll take a note of PGE energy. Yeah, that would be a good addition. So let me, at least temporarily, let's add and see where PGE falls in.
So
oh, there's no love for PGE. Did I have the ticker right?
Well, of course there's no love. They tried my bills got up like 6 times. Oh, that's why I have a low bid on it.
Yeah, so
I
I
should have
don't
only
think
kept
either
it
I
at
don't have a
8.
ticker or I need to fix this. Either I don't have a ticker for it, but probably it's not PGR.
PCG.
It's PCG.
Yeah.
PGNE and
PCG.
okay. PCG, right? PCG. Okay. Yes, there is some investment in PCG. Yeah, $574 million. Who is in PCG? Stephen Cohen, I'll ignore that. Point State Capital, I don't know who these guys are, but these are the two big ones. Some of the folks that I follow or know, they are not in, but maybe Point State Capital is a good one, but it's, I mean, I've never looked into Point State Capital. So I don't know about it. But yeah, there is some love for PG&E. Okay, FinTech, we looked at FinTech.
I think we might want to consider Visa and MasterCard here possibly, and also Pfizer. Pfizer has been down significantly in last few months.
Yeah. So we talked about Visa and MasterCard, I think the previous quarter, whether to include or not. And I think we agreed, okay, we want to have a, I guess we can include it.
So the reason is, think this way. So Berkshire trimmed their position last, right? Recently, Visa and MasterCard.
Yeah.
So that was one of their favorite stock for a long time, almost a decade. And I think they're facing a huge pressures across the world, not just here, because every country is coming up with their own way. How do they process their money? And Visa and MasterCard are losing. I don't know. That battle would be very interesting to see. But Pfizer is running through, like, I spoke with many folks in Pfizer, and they're saying nothing is wrong in the company wide, it's just a noise in the market. But yeah, they saddled with many lawsuits and the debt, but it is 50% down, but the business is like still kicking, making money like as usual.
So look at when I look at a Visa TCI fund like Chris Horn, a huge investor who I respect, Sir Chris Horn, who I respect a lot. Basically, I think 2025, this was the best fund perform of all the Wall Streets. Sir Chris Horn, you should, if you ever get a chance, listen to his investing thesis on the way he thinks and way he invests. Very knowledgeable person, and they increased their position in Visa by 10%. I respect that. I don't know about Egerton Capital. Fundsmith is having tough time. Poland Capital, Acre, Chuck Acre, Markel Group, Kotu, Bob Post, they're all now added on Visa because these stocks were beaten down. Yeah, I don't think institutional love is lost on Visa. Still a lot of money is there in Visa, even though it's a Berkshire Hathaway sold off their position. Yeah, you're right. They held it like 8.3 million shares for long time. They now exited it. But there are a lot of other folks who are still interested in it.
So there's a chatter basically that these companies could announce the split very soon.
Yeah. So here's the deal.
Right for split.
We always talk about Berkshire Hathaway holding big Visa position because Berkshire Hathaway is more famous. They hold 8 million shares of Visa. I've never talked about Chris Horn or TCI. They own like almost more than double the position in Visa. I would rather go and read Sir Chris Horn's thesis on Visa than Berkshire Hathaway's. But they got a lot more skin in the game. It's a smaller fund, more number of Visa shares, lot more skin in Visa than Berkshire Hathaway. That's one revelation looking at this. Let's move on to the next one. Healthcare. By the way, I mean, if you don't want to stay on this, I will be posting all these to X. So if you follow me there, you will get to know this. I do this every quarter in terms of looking at these themes and posting it. So I will be doing it. So even if you want to drop off here, you can get that information from Twitter. Let me remove. I should have a negative button to remove it. UX. Looking at healthcare, CVS has got the highest $6 billion, overall $49 billion. Basically, I think this is healthcare plus pharma and all that stuff, right? Medtronic is also there, robotic surgery, ISRG is also there, Gilead Sciences, Regeneron, United Health, Thermo Fisher, HCA. But yeah, CVS is number one across all the fund managers, and United Health is number two. Who exited United Health? Oh, sorry.
Berkshire.
Oh no.
Berkshire exited it. They sold it in loss.
So this won't get to know over there. United Health. Uh, 3 years of data. Berkshire exited it, Poland, Viking, Toray, Matrix, Bridgewater. And then prior, okay. Yeah, this quarter, these money have exited their positions in United Health. 5 million shares Berkshire held. They held it only for 3 quarters. Okay, I'll move on. So $47 billion. Move on to the next one. Mag 7 we already looked at. $198 billion. Say whatever you want to say about this Mag 7, that they lost the charm, people have moved on to semis and all that stuff. Money managers are still $200 billion in Mag 7. Right? So money managers are still voting by their money. And Berkshire Hathaway has the, oh, sorry. Let me look at that. That's a little surprising. Right. So-called Berkshire Hathaway. Okay, I think the 2 positions push them to the number 1 level. Right. Just because of Apple, they'll be number 1. And we say Berkshire doesn't understand technology. Come on, guys, they have the most money in Mag 7 as compared to any other fund. So interesting one. Retail favorites. All right, bring in your tickers. This is where we have all the shiny stars, trinkets, or the next Teslas, future Teslas. CoreWeave is number 1 with $4 billion. Rocket Lab is number 2. Bailey Gifford is in Rocket Lab. That makes an interesting stuff. Let me take a note to go and read Bailey Gifford thesis. These are the, I respect the Bailey Gifford team, so I need to read about this because I've been thinking about Rocket Lab. It's the same space as like SpaceX. There are 3 or 4 companies are in this, and a lot of stocks are popping up. But I never spent time in figuring out what it does, like details around the business. But if Bailey Gifford has taken a more than $1 billion position, probably I'll go and read and what Bailey Gifford has to say. What else? Grab, Coin.
So Vivek, these are still fund managers, right? So how do you track retail investors?
No, I'm saying the retail investors' favorite. We'll look at a Twitter, YouTube, go to any meetups or meeting. They'll want to talk about these stocks.
I think Reddit should be there. Reddit is one of the favorite.
RDDT, good catch. Your retail favorite. RDDT should be there.
SanDisk is another favorite.
Oh, no, SanDisk will come in AIT. I mean, where do you put that? So I'd rather put SanDisk maybe in AIT, etc. So I added Reddit. Yeah, so right up there, number 2. There's someone asked about Circle. Circle, $54 million invested in Circle. Open Door, like 0.08. Open Door like blew up. The one of the fund manager came and posted some video on X around Open Door, and then some crypto bros started talking about Open Door, and then suddenly it was supposed to be next big thing. I don't know where the stock is now, but I don't see any interest at an institution level. Yeah, so 10 to down 60%. Hims and Hers, ARKK. Kathy Wood has got billions of dollars. She should basically write a book on how to get money and not deliver. Right? Oklo Energy, Oscar Health, SoFi. So I add these stickers when I see on my Twitter feed one stock start to come up a lot because some person is talking about it and everyone, hey, yeah, we should, this is the next Tesla or this is the next X. Then I will come and add it here. Right? Do you have your stock in here? Anything else you wanted here? ACN, I'll come to ACN. Vishal said how to lose money fast. But she's still able to retain investors' money, right? She hasn't folded her hedge fund. Okay, move on. All right, SAS. This is where the Sassacre is. SPGI, S&P Global. What is, okay. This is annoying. I need to fix this. SPGI, FICO, CRM, ADP, ServiceNow, Workday, Adobe, Snowflake, Atlassian, Intuit, Figma, DocuSign, Monday. Note holdings for CAN. What was CAN? I don't remember. What is CAN? Why did I even add this company? Maybe I meant to add something else. Maybe I meant to add Constellation Software. I'm like, what is CAN? Anyway, I'll have to fix it. We'll do that later. Yeah, I think earlier during the call, someone asked, okay, SaaS companies, there you are. On SaaS companies, who owed what? Where's the most money gone in? TCI, again, TCI, Sir Chris Horn. He's still holding tight, man, on all these SaaS companies. He's still sitting tight. So it would be interesting to see what is TCI. Did it buying, selling? What is it doing the last 3 years? Mr. Sir Chris Horn. Wow, biggest position is GE. We're holding. I'm only pulling for last 3 years. Maybe let's go for 4 years. So bought in Q1 2023 and been just adding on GE. Visa probably has a long-term position for him and been growing it. Moody's. These are like a stable rock star. You can still see these businesses 10, 15, 20 years down the line kind of an investor. He doesn't run after new fads. Alphabet, very vocal. I have no idea what this company is. Probably non-US company. Microsoft, Alphabet, Thermo Fisher, then some exits. Yeah, pretty stable. I move on to the last one, which is chip or semiconductor. $61 billion, more than healthcare. I want to have my chips. Forget about my medicine. I want to have my chip. Maximum money, no surprises, has gone to Nvidia, right? And then TSM is the second one. Why not? Because they make the chips for Nvidia. Third one is Avgo. Why not? They design the chips for Google and Amazon and Marvell. Then these are the material suppliers to the semiconductor industry. Then now we come with the memory, Micron, then AMD, ARM, Qualcomm, KLAC. But yeah, I think Nvidia,
I think we can add ALAB here.
ALAB.
Yep.
I'm also want to add. Oh, this is a semi, right? ANAT will go in the chip side. Or this is semiconductor. So
ALAB has been a big disappointment for me. I've held it for a year, big chunk, and the thing like went down dramatically, almost 40%. But now it's close to like 1 year high. I mean, 1 year back price, you know.
Yeah, I mean, 1 year, 12 months is too short a time period to judge anyway. So
Well, in this AI Momo time, you cannot tolerate that. That's not acceptable. Please.
But this is the build out boom,
If
right?
Nvidia, if even the $4 trillion market cap company called Nvidia can go up 20% or more every 12 months, no other company worth the name AI should go 0%.
yeah, Nvidia didn't do anything for 6 months while other AIs were going up. Right now, Nvidia start to move up. What last
Yeah,
1 month or so?
yeah. So as of last 1 month, it's become much undervalued by financial metrics.
So look at this. Since November
I mean,
to May, end of April, Nvidia did nothing.
so again, the realization that basically agentic is going to unleash a lot of value creation all across the ecosystem. That's the word.
So while rest of the semi stocks were like started to dip higher, Nvidia was just sleeping
Right.
until last 2 weeks. It started to wake up and move forward. I think Nvidia is announcing earnings this week. Nvidia earnings coming up, right? So
Wednesday, yeah.
anticipation.
Vivek,
I
a
think when we
question.
moved into the build out, I think that's what happened. That's where the ALAB came in play. The build out thingy, the APH,
That is true,
ALAB.
but what happened was like Nvidia said we will not use your stuff and we'll use our own NVLink, and that's when ALAB tanked in the fall of last year.
Oh, so ALAB operate in that space. Okay.
It's just like a Ethernet or old kind of silicon-based or electronics-based linkage.
Okay. I know because I mean didn't track ALAB, but because I own Arista Networks, and they have been Envil, they have a competitor of NVLink. They're trying to build it on open Ethernet technology. So and then Nvidia has a Spectrum X. So that's one area where I'm like, I can't increase a lot of my position on Arista Network because there's one area where they're competing directly with Nvidia. I don't know how strong will they be, but I'm happy about. I mean, Jayashree Ulal is an amazing CEO. There, she knows how to run the business. It's like a lot more greens in Arista Networks. Just like we saw on Adobe, similar greens I see in Arista Networks. So coming back to the Thomson Reuters, someone had asked for Thomson Reuters. No, man, no. There's not much revenue growth left in it. So if you are looking for growing business, I don't see that as something. This has become more mature. So gonna continue the profit margins, will give capital back to shareholders by buying back or buy through dividend. So more of a retiree stock, I would say. Take your life easy, go and sip beer or pina colada at the beach. The stock, will give you some return. Not much of a firework. Because it's a mature business, they're able to generate free cash flow. Don't do much what to do with that free cash flow, so we'll give it back to our shareholders. But pretty stable, but not a huge growth business. I would not invest in this for, let's say, where I'm looking at 10, 15 years down the line, if this business can grow. They haven't given me, the numbers are not giving me the evidence of that. It's a single-digit growth for last
Vivek,
9 years.
did you rebuy Nvidia after you sold it?
I didn't sell all of Nvidia, right? So
Oh, okay.
yeah, so I
Okay,
still
that's okay.
hold.
That's it.
I did add it to my position to Nvidia when there was a little bit of weakness, but right now I have that like coffee can position which I held, and that's why I love the whole concept of coffee can. I'm like, I'm not playing anything on this coffee can position, so let it be there. And thank God I had it, right? Because Nvidia has like gone up a lot more after I had sold some portion of it. So I still hold Nvidia. All right, that was the last one, I guess. So thank you. It's almost 1 p.m. for staying along. Yeah, I will, once I start to open this up, the Optimizer for others, you will get access to this as well. I just integrated it in Optimizer yesterday. But if you have anything else you want to look at, do let me know right now and I can do it. Or I will post
Hey,
all.
Vivek, what about Accenture from the fund buying perspective? Anybody looking at
Fund
Accenture?
buying.
I mean, any of these guys?
Okay, so let's look at where I was looking at individual funds. ACN as a stock. So we got 14 funds that hold it. Yeah, $1.1 billion in it. Zena Investment has got 477 million. They actually added a lot.
Okay.
Bridgewater, they're a hedge fund, so they'll probably move in and out anyway. Yeah, so these are the big investors, I would say. There's some skin in the game. And then again, Beats is another one, got 2% of their portfolio.
Recently?
But this is in as of end of Q1 2026, right?
Hey, Vivek, could you compare that to Cognizant, CTSH?
It's Cognizant CTSH?
I believe so.
Oh, right. I've never looked at Cognizant. Again, $2 billion, a little more investment in Cognizant. So looks like Zena Investment and these they are like both in Accenture and Cognizant. Hold on, let me build a theme itself, which is for, give me a name for this theme.
Services, right?
IT services?
Yeah.
The services, okay, hold on. Since I was logged into my admin page, 13F Analyzer, where's the thematic views? And then you guys also gave me Reddit goes in. Retail favorite. Okay, let me minimize this, some of these things so I can see the screen. Sorry guys, just give me a moment. I'll just gonna update some themes and we'll create a new for our IT services. Retail favorite, edit, add RDDT, save. What else? Okay, I'll look at that, but let me create a new theme, which is IT services. Okay, ACN, CTSH, INFI, Infi. What else?
Deloitte would be in there, right?
Deloitte
Is public?
No, it's private.
Yeah, that's why I didn't think Deloitte was public. Any other companies? Okay, let me refresh this.
Booz Allen may be public. I'll check.
BAH.
I think so. I'll check.
We're looking at themes. IT services. Okay, let me take out this restriction. BAH?
Yeah.
Okay, let me temporarily add BAH here. And while I'm on admin page, let me update at BAH. Okay, it's been permanent now. Okay, so I'm looking at $2 billion in Cognizant, Accenture 1.1. No love for BAH. The BA is more on the government side, right? Government, they do a lot of government contracting. And not much love of Infosys is India-based services, IT services. Yeah, but it'll be interesting to see how their journey has been in terms of quarter over quarter, if you want to look at that. ACN, last 3 years.
There's also TCS, right? I don't know if you added TCS.
I didn't add TCS. Is the ticker TCS itself?
Yes.
I was thinking about it, but then I realized, okay, I don't know the ticker. Okay. Infi, because I saw that some fund actually hold Infi, so I've seen that ticker. Okay. Okay, I added TCS.
So I don't know if it's TCS in US, right?
No. So Accenture. Wow. Srina Investments, they opened in Q3, adding to it. Maybe one interested in Accenture, this is where we should go and look into it. They own 24.1 million shares of Accenture. They got the most money in Accenture, $477 million. And then maybe Poland Capital, Ruane, Bill Ruane's. Bill Ruane was a money manager when he was the guy when Berkshire Hathaway, when Warren Buffett decided he doesn't want to run, be a money manager, he returned all the money to his people and say, if you want to invest with Bill Ruane. Bailey Gifford. Yeah. That's Accenture, CTSH. Yeah, $1.2 billion, Dodge and Cox. Yeah, so I think IT services looks like at a big term, IT services. Zena Investment Management is what we should look at. They are the only one, at least of the 100 that I plus that I track. They have investments, a big investment in these. Maybe Dodge and Cox you can see, but they are the biggest one. Okay. Which other one? Okay, I did BH in here. Cool.
Well, in IT services, there's, I don't know if you want to add IBM, right? Though IBM is a very complex, it's got a lot of stuff. IBM, Kyndryl, those are the ones. And, Kyndryl is also.
Kyndryl is their services part business, right?
Yeah. I think Kyndryl may be better. Yeah.
Yeah, that might be better. Do you remember the ticker?
Kyndryl, let me check. KD.
That's it.
There's also DXC Technology, right? DXC.
DXC.
Yeah, that's X Computer Sciences Corporation.
Oh, that's a XCS. Oh, okay. I never knew that Computer Science Corporation like became DXC or whatever merger.
So DX, it's Computer Sciences Corporation and HPE Services combined to give DXC.
Oh. Because DXC name I've heard, but I thought it is a new name. I never realized, I never owned it. I never looked at the history that it was a combination from HPE and CSC. All right, so no, why am I advertising tech? IT services. Let's look at no restriction. So Kyndryl, $55 million, Booz Allen, 80, Accenture, TCS and DXC. Either I don't have the ticker right, or otherwise there is no love shown for these people.
DXC, just DXC is the ticker. KD is Kindle is KD, and TCS is not in the US stock exchange.
No. So okay. So then TCS probably wants it. So Kindle shows up. DXC, there is no fund reported holdings in DXC.
Makes sense. Yeah.
But that's IT services. Yeah, this guy got $1.7 billion. More than half of overall IT services investment among what we're looking at 21 funds actually hold this.
Mhm.
Alrighty. Well, Sam,
You can-
otherwise we are done. All we're doing it, we can do however long
Vivek,
you
you
want
can
me to do
remove
this.
Vivek, you can remove TSC from there because that doesn't have a US symbol.
Okay,
The TSC is not valid.
Okay, sorry, TCS, right?
Sorry, TCS.
Yeah, I'll remove this. Thank you. So next summit won't show up. TCS. Oh, IT services, edit. Remove TCS. Again, don't use this to follow, but get some ideas like Sunbelt, whatever that Sun stuff was there. I'm like, I never heard about this company. And now since we're talking about the company, let's also look at who else owns that company. SUN or some Sunbelt or something it was, right? Yeah, Sunbelt Rentals Holdings suddenly showed up as number 2 in terms of a new love. Okay, let's see how Wall Street has been. Oh, come on. Was showing a different ticker or what's the issue? SUNB. Okay, so ticker normalization yet to be done. The data is crazy. Yeah, I couldn't even. Wow, what is this? No data? Wow. So no one suddenly woke up to this company. Either this is a new ticker or maybe merged from another one. And just in Q1, they pushed it to like number 2 in terms of new investment. SUNB. This is interesting. SUNB. Oh, this is a new one. That's why. Okay. Okay, I get it. All right. That's why there is no data for previous year. This is a new company came new IPO. Wow, that's been existing since 1947. So for whatever reason, you can look at the history. They only started trading in the market now, but this is okay. Now I understand. Okay, why I was surprised that suddenly why they started to love it. Maybe Wall Street wanted exposure to it, but it was never available. Oops. Okay, what else? Rajiv has some interesting chart to share. Oh, top decile momentum versus benchmark.
Yeah, so the way this works is essentially we take the daily returns to a series of stocks. Say I have 200 or whatever. And daily returns means how much percent change each day happened, like 1% or minus 1%. Then essentially look for this very simplistic momentum model. Essentially, it's just sorting them on the most cumulative gain over the last n days. In this case, it could be month. And then essentially ranking them. And that gives you 10 deciles. So I'm showing the top two deciles and the bottom two deciles. Now
So
there's a wrinkle to this book called Quantitative Momentum, which I read in. It has a new. It has another wrinkle on it, which basically says if a momentum of a stock has been going more steadily up versus what it calls like people whose attention suddenly gets gravitated on something like SanDisk and pops it up, they can be we can apply that measure and reduce the kind of like filtering on top of the decile. So that also has been applied. So basically that's what you're seeing here.
So when you say you track daily, but then 10 days is like
No. So returns are daily.
day minus the first day difference,
No.
or is
Okay. So
that's what
all quant momentum. In fact, the money management world works with daily returns. So daily returns means like if value was 100 yesterday, it's 101 today, then its return is 1%.
correct?
So we basically take these daily returns, and I'm looking at a look back period of say 2 months. And with that look back period, then in this case of this modeling, it's basically just making a cumulative, essentially multiplying all those daily returns over that n days,
Okay.
and then you get a cumulative run. So this thing called Maxell, which is actually amazing. It's been staying up for a while. So that's got the highest cumulative return. But like I was saying, if something has been going up more steadily than being very jumpy, that can also be applied. And that way you can find names which are going up without crowd attention. And now everything in this money management world works with creating a long short portfolio, ideally speaking. And you have to have a lot of money or essentially a hedge fund to do that, because what you have to do is buy the top decile and short or not own the bottom decile, and then essentially rotate the money out each time you rebalance. Now in this case, we could rebalance once a week or once a day. And what that would mean is selling all the losers and buying all the winners and keep doing this over and over again. So the book actually shows the evidence is clear. Over 100-year period, momentum has outperformed everything, value, growth, everything.
Yeah, man, whatever works. So
yeah, I guess read that book. It's easy to read. So yeah.
Yeah. Sorry, what's the name of the book? Can you say that again?
Yeah, I guess it is called Quantitative Momentum, but I think that book is actually documenting financial research which has been around for 40 years. And, I guess this book would be more of a book for people who are steeped in this terminology and all and understand financial math, as they call it.
Cool. Alrighty. Interesting one. What other stock want to talk about? Otherwise, we are done for today.
Yeah, thank you. I guess I'm going on a little vacation for a week, so join after.
Will I not see you next week, or will you be back?
No, I'll not be here next Saturday. I'll be in Vancouver, Canada.
Cool. I think we have a trip coming up for Toronto. I don't know what date. We have to basically go and attend some friends, some marriage. My wife's friend's marriage. Something is there. So she asked me, "We'll go to Canada. We'll go to Toronto." I'm like, okay, whatever. I'll have to pack all I need is a laptop and internet connection to work. So I'm ready to ride along as long as we are going.
So, do you pack your laptop in the checked baggage or take carry on?
I always keep my laptop in my carry-on. Now I avoid opening laptop in the flight because that's the time I want to use to read, catch up on my reading. So either I'll have my iPad on to read or some physical book. So this time on my Berkshire Hathaway trip, I basically carried a physical book for the Edward Chancellor, right? The Devil Take the Hindmost, because I've been way behind in my reading because I've been focusing on this optimizer stuff. So I'm way behind on reading stuff. So
Which book
You
was
had
that?
an issue with the laptop being packed in a checked baggage in USA flight, and the TSA opens it to check. Has it ever happened to you guys?
no, so some TSM, some machines you can keep your laptop in the bag, or you can, or some airport they'll ask you to take the laptop out of the bag. It depends on what kind of a scanning machine is it. Because I asked some TSA, I'm like, hey, in my other flight, they didn't ask me to take out the laptop. They said, no, our machines are not upgraded. That airport has got upgraded machines.
No, I'm
Um,
talking about the checked baggage. I'm putting it in the checked baggage, so which goes
checked
on the
baggage.
bag, yeah,
No, I
conveyor.
never. No, I have carried laptop in a checked baggage also earlier, but
Never had a TSA open it, right?
no. I
Okay.
think I got my baggage opened by TSA, but they never give you reason why they had it.
Yeah, that's the thing that.
Right? So only thing I look at is, hey, is there anything missing out there or
But
not?
each time they did that, they broke the locks of my suitcase, which rendered it unusable.
No, because you didn't put the TSA approved lock, so that's your
Now
problem.
I'm bought one, yeah.
So in a recent trip that we did on we went to Dubai. Thank God it was like 2 weeks before we bombed it. Otherwise, we would have gotten stuck there. So, and we went to the hotel, opened it, and I saw a TSA note. I asked my wife, I'm like, what did you pack in this one?
Man, they're
Because it was her suitcase that the TS had opened it, and we saw a note there, and I said, "Hey, check if everything okay." I think, yeah, she had a bit, maybe. I don't know if that was correct. Did she have a small, like, the what do you call it as? So, like, charger, the battery that holds the charge for charge your cell phones. I can't recall the word.
don't keep any such thing. I'm
Yeah,
very
but I don't know why they opened it. We couldn't find a reason, but there was a note that this was open. Like, okay,
They're very low bro people. They suspect any little thing, they open the damn
yeah, yeah.
thing.
Yeah, Carl Zastro. Thanks, Carl, for joining in. Yeah, so I keep my laptop because if the baggage get misplaced, I don't want to be out of work. So so how's the name of the book? It called Devil Takes the Hindmost. It is by a person called Edward Chancellor. So this basically is a book which takes you through the history of these financial meltdowns. Like what happened, and that's why I've seen over and over again the same greed will basically blind us in terms of how we invest in the markets, whether it's a stock market or whether it's whether stock market now or whether it was during when railways came out, whether it was when canals came out. I've read other book also, Engines That Move the Market, same story. So, but
Got
this one, Edward Chancellor, he goes back all the way to tulip bulbs and talked about what happened during that and all that. So he's basically a market historian kind of a stuff.
Right.
Good. It's a very detailed history of that. So I only could read, I think, 60, 70 pages during my travel. And then I came back and I again got busy on this one, so I'm falling way behind. Kathy, thank you, Kathy, for joining in. Anything else, or are we done? Looks like we are done for today then. I'll head out for lunch. Our friend Shri did not have any question today. Is Shri on? He's one of our regular guys.
Thank you. See you guys.
Maybe okay, I don't see him now. All right, guys. Thank you very much. And we'll talk again next week. Next week will be big because we got an Nvidia earnings coming up. So let's see what market does to Nvidia and the rest of the semi stocks. Bye, everyone.
Thanks.
Cool.